Welcome back. Good morning, afternoon, evening. Welcome back. Okay, let's get it. Where's my charts? Where are my charts? Give me a sec to pull up the stream. It happens. Oh, there we are. And we need that P&L, please. We need that P&L. Any second, any moment now. Any moment. Any moment. Any moment now. Any moment. Production. Still waiting on that P&L before we get started. But whatever, let's get it. Let's get started. Oh, there we go. P&L's up. Oh man, allergy season is crazy. It's either in the spring or it's in the fall. It's one of the three. All right, let's get it. Word of the day. It's Friday, guys. Happy Friday. Last day of the trading week. We're going to finish off strong. We got the word of the day. We have 1 Peter chapter 2, verse 30, 22? 22. 22. Am I right? Let's see. Is this right? 32? 22? For some reason, I can't. It's 32. 1 Peter chapter 2, verse 32. He never sinned, nor ever deceived anyone. He did not retaliate when he was insulted, nor threaten revenge when he suffered. He left his case in the hands of God, who always judges fairly. He personally carried our sins on his body on the cross, so that we can be dead to sin and live for what is right. By his wounds you are healed. Once you were like sheep who wandered away, but now you have turned to your shepherd, the guardian of your souls. Glory be to God. Thank you, Lord Jesus, for being our light, our way, our path, our redemption, our salvation. Thank you for being the truth, Lord Jesus. Thank you. Also, we have John chapter 6, verse 31. Jesus asks, what's up, Yakubu? Jesus asks, do you finally believe? But the time is coming. Indeed, it's here now, when you will be scattered, each one going in his own way, leaving me alone. Yet I am not alone, because we have the Father. The Father is with us. I have told you all this so that you may have peace in me here on earth. You will have many trials and sorrows, but take heart. He has overcome the world. Baby, D baby, yeah. But anyways, y'all, God bless y'all. Let's have a good day. Let's have a good day. Let's put our faith in, our trust in Jesus Christ, and he will sustain us with his grace alone. Let's get it. All right, let's look at this market. Friday, don't really have no news. Don't really have no news Friday. I didn't do so well yesterday. Was well over 1,000. Yakubu. All right, let's see. Look at the weekly. Okay. So we are in this range. Let's see. What is the range? It's this high. It's this high and this low. So, right? We are in this range. Place it up here so y'all can see it. That's what's up. Right? We are in this range and we have not broken this range yet. So we're trying to figure out what's the next stop on liquidity. What's the next move on liquidity? Which way are we going? Are we going up or are we going down? That's what we're trying to decide. Should I sell this market to take out this? Should I buy the market to take out that? Which way are we going? Yeah, man, we haven't posted, in a while. It's been a minute. You know, it happens. It happens. Sometimes you just things change, life change, and and hopefully, by if it's in God's will that it happens again. But it's going to be totally different. It's going to have to be spreading the word. It's going to have to be in the faith. I can't do pranks and challenges leading you guys the wrong way. If I'm not spreading the word and teaching something that's related to literacy or some type of like help, then I think I'm just wasting your time. If it's pranks or challenges, I'm wasting your time. If it's not conducting faith to y'all guys and showing you the truth, then I'm wasting my time. And I realized that when we was posting. I feel like it's way more important spreading the word, giving y'all hope and faith and the right direction than leading y'all down the wrong way. And I can't have that on my hands. Doing just just senseless pranks and senseless gluttony challenges and crazy. I can't do it no more. Just can't, y'all. So yeah, I don't think God wants me to do that no more. Yeah. Sorry guys, the fate I can't be lukewarm no more. I can't really see myself being lukewarm no more. I try my best not to sin, but at the same time, I can't have one foot in, one foot out in my faith. I can't. It's just either you're gonna go backwards or you're gonna go forwards. You can't stay the same. And me trying to stay the same is gonna either pull me into one direction. For example, like you growing up, you're not gonna go in reverse and become a baby. You're getting older, so things change. And as much as you want to have fun and do what you want, you're gonna have to choose a side. Whether you going through that broad road of destruction, or you going through that narrow gate of eternal life, which is small and thin. And I'm choosing that narrow gate. If I keep on working on that road, we'll be better. I'll be better much off. Yeah, you got to, man. You're gonna be 20 doing the same thing at 30, then you're gonna be 30 doing the same thing at 40. You're gonna do 40 doing the same thing as at 50. I mean, it just makes no sense. You gotta do something. You gotta be much. I ain't say you gotta be born or nothing, but either going one way or the other. Either you're going backwards or you're going forward. Which is it? You gotta choose. But I'm definitely gonna post. But just this time it's gonna have to be. I'm gonna have to spread the word more than anything. I believe that spreading that word is gonna be the pinnacle of the posting. It has to be. I can't do ratchet pranks no more. Cheating, lusting, stealing, angry, hatred. I can't do it no more. Man, I can't do it. Ever since this walk with Christ, it's been different. It's been different. And I know I've had a lot of people grow up. I've noticed that. What's crazy? It's funny how y'all say that. He's 13 and he was watching me since he was 19. Man, it's crazy. He's been watching me since he was 13. But I'm glad you're here. I'm glad you're here. You're listening. I've probably done a lot of stuff that I'm not proud of. And I have probably influenced a lot of young people on certain stuff, and I don't like it. I don't like it. I feel like, who am I to influence you? And then I'm like your childhood, and you grow up, and this is the way you act, think, talk. It's not life, man. It's not good. It's not right. All right, let's see what we got. So we have a lot of intraday highs and lows, right? A lot of internal highs and lows. This market might be looking like it's going to take out these highs. We're going to see. We're going to see. Look at this daily. Put this previous day high, previous day low up. Let me see. I don't have one up though. Okay, let's see. Previous day high. Previous day low, which is right here. Previous day low, right? Bop. Previous day high, which is up here. Bop. Right? Previous day high. Put that in the back. There we go. Let me get rid of this yellow so you can see it better. Like that too. Which way are we going today? I'm also looking at some other markets too. Excuse me. We hit this block and had a nice little bounce. Market opens up in 18 more minutes. See if we can find some zones. So how do I get into day trading? I don't know. It's so weird because when I got into day trading, it just happened. I don't know. I was so for example, one day I was looking up new ideas on TikTok. Like I was like, man, what's out there? What's else out there besides just doing what I was normally doing before? And I came across trading, and I was like, oh, whoa, what is this? Didn't know exactly what I was getting into, but I started like really liking what it was. I started really liking what I was seeing videos of people trading, making profits, getting into their trade. I really enjoy watching the videos, and I was like, man, I gotta do this. So I started learning what trading was. I started learning candles, wicks. I started learning highs, lows. I started learning all of the basics and fundamentals of trading. And then I end up gaining my own edge after learning the ropes. So I started gaining my own edge. And I tell you the truth, trading is not hard. It's not hard. You make it as hard as you want it. It's just as hard as you want it to be. I can right now. Watch this. I'll show you for example. I'll show you for example on how trading is not hard, but it can be hard if you make it hard, So right now, look, we had a green candle with a red candle, couldn't break down. Now we having a green candle right now. We got 60 minutes on the 30-minute, right? This is taking out these highs. So I would say the next point of liquidity will be this high right here. So if I was to get into a trade, I would get into it right. Oh, hold on, wrong market. Give me a second. MNQ. If I was to get into a trade, I'd take this to the highs. My target would be taking out these highs right here. So you're pretty much getting in an entry and looking for a target. And also, you're setting a stop of how much you're willing to risk, right? So I want to risk $257. I believe that the market may not come down to this, but I'm willing to risk this at the bottom of this low. But I want to see the market take out this high right here. So I got in right here. I'm expecting it to hold this block right here, right? To hold this block. I'm expecting the market to hold this block or even hold this right here, right? And continue up to the highs. So I go down to a lower time frame to see if it's respecting, and it looks good. It's looking good. So what I do is while the trade is going on, I will also look for more other things like a opportunity if it wants to come back down. So if I'm like, okay, what else would I look for? So it's pretty simple. I feel the market is going to sweep off the highs this short. We're gonna see. We're gonna see. We do have a fair value gap right here too. Market opens up in a few. We have no news, so we might not see no strong volatility. We might see volatility when the market opens, but it might start slowing down throughout the day. So we do have a fair value gap right here on the 1 minute. We also got a zone right here, a block right here. Got liquidity right there. Got some highs right here. We're gonna see if it wants to hold this range, bounce right here, or continue. Now, the reason why I get like, okay, so what if it comes back down? And you might say, what if it comes back down? And why did I not wait for it? Sometimes the market just might take off. It might hold this level and just take off, or it might retrace and then take off. But that's the name of the game. You get in what you're most comfortable willing to risk. So if I wanted to risk this, let's say if I bring my stop up here, I want to risk no more than $121. I mean $122, right? This is what I'm willing to risk, and this is what I'm accepting that the market is gonna, if it does come back down to this, I'm willing to risk 122. I got in right here, and I'm taking my profits up here, right? It's pretty simple. Why am I doing this? It's because I looked at a higher time frame, and the market is pumping long. I go down to a lower time frame, and I see that the market is continuing to go long. And every time I go down to a different time frame, it's respecting the time frames, right? So in my opinion, in my probability, I believe that the market is going to continue to push. But to be safe, I want to take some profit. Excuse me. Whether that's in a live account, whether that's in a prop account, a demo account, I'm just working on my craft to see where this market may go. I don't have to be right. I just want to make sure that the probabilities of favoring is in my favor, right? See, it seems to work out in my favor, right? It's looking like it's working out in my favor. It hits my TP. Once it hits my TP, then I'm out the trade. So watch. And you're going to see the money above me change once it hits TP. So I got into the buys. So I bought the market, or I longed the market, and I'm looking for profit right now. So once it hits it, then I'm out. You can make the market hard for you. You can make it easy for you. It's all based off your psychology, your strategy. You know, it's easy. Even you don't have to, you probably have to, look. Here's the thing. You could have only been trading for like 2 months and had the simplest strategy, and it works for you better than somebody that's been doing it for 10 years. You can have the best strategy, but if your execution ain't right, it ain't gonna work out. A simple trade. I went into 5 micros, which is 5 micro contracts. I believe that it was going to take out this high right here, which is this high. See that? And it might drop again. That was my target. So let's call this target, right? Make this color, make it red. This was my target. Let's go back to it. So see, it's kind of fidgeting around that. See how it didn't take it out and it dropped back down? A lot of times, right? A lot of people sell off, or the market sells off before it sweeps the liquidity. Watch this, see? It didn't really sweep the liquidity. It just stopped halfway and dropped, which is okay. Now you're like, okay, I'm scared now. It didn't sweep my liquidity. I'm nervous. The market dropped. What happened? What do you mean it sweep? Look at that. It didn't take it out. Can you see? It didn't even touch the line. Right? It didn't touch the line at all. It literally just stopped and reversed. I'm okay with that. Now, let's see right here. So what I do is I would look at the market again and start analyzing the market to see if it's going to have a continuation long back up to the highs, or is it going to come back down to this fair value gap and bounce. And it might be an opportunity for me to add more, depending on my risk, right? Depending on my risk. If I add more, I'm risking more, right? But the thing is, don't be afraid of the market. If you say you're willing to risk $100, accept that $100 is no longer your money, right? Don't say, oh, it's going down, let me just get out. And if you get out, then it pumps on you, you missed out on the trade. Just like that. See? Now, see how the market tried to sweep down and took out liquidity? So it did take out liquidity right here. And what's the next move? It looks like it wants to continue long. We're going to see. It bounced at this what? This high. Look what happened. You see this red candle? It looks like a block. Let's see if it's going to hold this high right here. See right here. See this high? Let's see if it's going to hold this range and continue to bounce. If not, then it might just hit this liquidity right here, this fair value gap, and bounce. So trading can be as simple as you want it to be, or as hard as you want it to be. I'm in 5 micros right now, as you can see. 5 micros. I also got the chart right here. So this chart on the right side you see is literally the same chart you've seen. So let me get rid of this. Let me get rid of this so you can see it better. See, this is the same chart. Look at the cursors, right? Look at the cursors. They're literally the same. They're moving at the same on both charts. One is a higher time frame. You can see right here. It's a 15-minute right here, and this one is a 1 minute. You can look at the one. You see the 15. This is a 15-minute. This is the one. I use these charts as confluence with each other to see how the market is moving. Yakubu thinks the market is going long. We had the market opens up in 10 more minutes. Or, okay, we got a 5-minute fair value gap right here too. 5-minute fair value gap right here. Market is still pushing. 5-minute fair value gap. Nice push. Nice strong volume spike. We're going to see though. Nice strong volume spike right here. Got a 1 minute also right here. Market's looking good. It's looking. This is the thing. The market can look crazy, or it can look healthy. To me, this market looks really healthy. I like how it looks. The market looks really healthy. I mean, I want to say I'm the best explainer for this. I'm the best teacher. Call me teacher. But the market can be as easy as you want it to be, or as hard as you want it to be. A dummy can trade this market. A kid can trade this market. You're either buying or selling the market. It's just that simple. But technicals, when you get into technicals like CRT, you get into CRT. There we go. We've been taken out. See, it took out of our range. It swept the highs. I'm up $76. See on my P&L above. I believed in the trade, and you're like, okay, you might say to me, now explain your trade. How did you probably know that it wasn't going to sweep these lows? So for example, you seen that this strong candle right here, look on the 30-second, this is a low right here, right? And this is a breaker. I mean, well, this is a block. It swept these lows with these wicks, right? And it held this block right here. So when it swept these lows, it didn't break once. It didn't break twice. It didn't break 3 times. How you know it's not breaking? Look at this. Let me show you. Let me show you. Give me a second. Give me a second. So right here, it swept this low once. It swept this red line twice. It swept this red line 3 times, and it just would not break. And another confirmation that you know that it didn't want to break. Look right here. It's stacked. These candles just kept holding up across. Wicks, it just kept wicking, but it just held across. See these candles? They're just staying above. They're not going down. They're just constantly stacking while wicking, stacking while wicking. That's a strong indication that this market doesn't want to continue down. Even if we got fair value gaps right here. Now it can come back down right here. But the thing is, I look for a scalp. I scalped this market for how much? Let me see. I scalped this market for 37 ticks, which is small, right? It swept. So that's a good indication. Also right here, see how it's stacked? Good indication for a continuation. See? That's how you read the market. That's technicals. That's how you technically read the market. If you're looking for sweeps, sweep of the highs, sweep of the lows, CRT, candle range theory, you're looking for AMD, you know, you're using indicators like RSI, you're looking for fixed volumes. But if you're like, man, it's low, it's attacking this low, it's not breaking, it's going to go in reverse. Man, it's attacking this high, it took out this high, it's not breaking, it's going to go in reverse. So you can make it the market as simple as you want to make it based off your strategy. I'm telling you, you could be trading this market for like 2 months and still be better than somebody that's been doing it for 10 years. I can guarantee you. But the more you trade, the more screen time you receive on this market, the more you understand how the market develops, how the information plays out to you. So if the more screen time you get, meaning like if the more you constantly see in this market, day in, day out, day in, day night, you know, day in, day out, day in, you're like, oh man, I'm understanding how this market manipulates, how this market sets up, how this market traps, right? So it's real simple. So look, we had one execution. I'm gonna put the executions up so you can see how I played it. Executions, right? Bop. Get rid of all of this. Y'all seeing how it is. Market's about to open in 5 more minutes. Market's having a nice push. You see right here. So this is our target. So we got in right here, right? Got in right here. Swept the highs. Perfect trade. I had a stop right here. See, beautiful trade. It worked out. Right? Perfect trade. Had a stop right here. Got in right here. Took out profits right there. A one for one trade. A 1R. Now what's happening right here? What's happening right here? So let's analyze. So we're respecting this range, right? Respecting this range. We couldn't break this wick. How do we know we couldn't break? Look how this red candle is respecting this wick right here, right? And look how these wicks are coming down into this body, but still stand above these highs. This red candle right here couldn't pass this wick, and it stayed above. That's one confirmation that it's trying to hold. And you wait for the next candle. What happens right here? It held this. This body of this green candle got above this red candle. Okay, this market looks like it wants to continue for the longs. Look at another time frame. What else do you see on the 30-second? Right? You look at the 30-second. It's stacking. And guess what? It's gaining higher. See that? The wicks are it's wicking down, but it's wicking higher. Like you're getting higher. So that's a good indication for a continuation long. Like that's not a bad move if you're looking for a scalp back up to these highs, right? You can even look at a 15-second. See, it just keeps stacking and keeps stacking. You're getting more confirmation. You're getting way more confirmation that this market wants to respect. Also at this line right here. See? It took out this high and just kept going up. 30-second, stayed above, kept going up. 1 minute, didn't break this wick, kept going up. And it just respects. What else happens right here? Look again. Another opportunity. Even right here for a scalp, it came back up to this high. Respect. Now this is tricky because look, it's breaking these wicks. So be very careful right here because we are breaking, but we also holding. On the 1 minute, we're holding. So see, you see how it's stacking? It's simple. If you want to trade it like a stack, then you can trade that too. But if it's stacking and respecting, then that can be your trade. You can make this trading as simple as you want it. See, you can make it as simple as you want it. Look how it's stacking and respecting. See that? It looks like a stack, right? Am I lying to you guys? Does it look like a stack? And look how it's going up. See? Look at this yellow line I have right here. And it's not even a strategy. This could be just a simple analogy. Like, okay, this thing is just, see? Just going up. But look, be careful because it gets volatile because what market's about to open in 2 minutes. So a lot of volume spike is about to happen in here. So you see it. It's doing what it's showing, you know. It's just, you ain't gotta overthink it unless you want to. I mean, if you're learning different ways, by all means, master it. But if you want to keep it simple, keep it simple. I mean, they got so many strategies out there. No matter what the strategy is, if it works for you, it works for you. It's plain and simple. All right, here we are. What is happening right here? This is alarming. What's happening? We're not breaking this high. Okay, I see that. We're not breaking this high of this candle. The candles right here are not breaking this wick. Right here, this wick is not being broken. This is alarming. In the next 10 seconds, if this isn't break, this might see a continuation. This might see a reject. Okay, see, we're pushing. Looking good, looking good. Okay, it still looks strong. The 1 minute didn't break. Oh, market's about to open in 1 minute, so it's good to stay out of it. Does look like a nice breakout. Does look like a nice breakout. It's just getting really, really volatile. Remember, every candle and every wick tells a story. What do you mean? Like, how does a candle and a wick tells a story? Is it respecting the wick? Is it respecting the bodies? Is it respecting the candle? Or is it literally like this? Is it respecting this? Like, say this is a block, right? This is a block. I'm gonna show you this right here. Wait, hold up. Let me get rid of that. You would say this is a block, right? Let's call that block. Because this is a red candle, this is a green candle, and it's a block. Just look at it as a block, right? You go across, what happened? It stayed above. The candles couldn't even come back into this. And what else the candles did? They couldn't even break this wick right here. If this is a twin, look at the twin of this. This is a twin. A red candle with another candle. The fact that this candle couldn't come back down and break this wick, and it just wicked down but stayed above this block. The next candle is a green, and guess what happened? It got above this candle, right? So this is a strong indication for a move for the longs. Maybe a quick scalp. Nothing too crazy, but maybe a quick scalp high, right? Something like that. You don't want to go too crazy. All right. Also right here, what else is happening? I'm going to show you. Give me a sec. Let's see. But we're going to see because we still got this fair value gap. You want to keep in mind, though, even though you might, oh, it's stacking, it's stacking, it's stacking, right? You want to keep in mind, you still got these fair value gaps right here that hasn't been mitigated. Right, they still haven't been touched on. There's a lot of imbalance right here. This market might want to come back down, tap this, and then have a continuation. The market might do this. The market might hold the target and go long, or the market might come down, bounce, and then go long. See, you just want to be mindful, but don't be afraid of missing out. Just say, okay, yeah, I see this imbalance right here. Can this market have a continuation? Right, can this market bounce right here, respect this area right here, right? Can this market, right here we go, we got a block, right here, block right here, right? Can this market hold this range? Can this market respect this block, hold this high right here, right? Put it up. Respect this block, hold this high or this wick, respect it, and go long. That could be your setup. And you take your trade, how many contracts you want, whatever, right? Market is open. It's been open for a minute. So you want to be careful though. Because market been open. See how volatile we are? Right? We got 28 minutes left on the 1 hour. The high time frames is going to give you that understanding of where the market wants to go. We still got some highs that we could take out. Right? Let's see. What can I do? What can I do? Let's see. Alright, I'm gonna call this target because I like how this looks on the 1 hour. I'm gonna call that target. Look at it. Let me look at it daily. See, pop. Let me take off executions real quick on this account. All right, here we go. Go down to a 5 minute. All right, what we did, we tapped that 5 minute. Looks nice, right? Tap the 5 minute. We had a respect right here. These are the lows. I'm gonna take this wick. These are the lows. That's the low of that candle. These are fair value gaps. I like how it looks. This is the 15 minute right here. I'm gonna make sure. I might make this the 5 minute. 5 minute. Okay, here we go. Let's look at a lower time frame. Is it respecting or breaking? Okay, it's holding. It's holding these ranges. So we're gonna see. I want to look for the sellers to dry up. If the sellers can dry up for me, then this looks good for the longs. Let's see, right? Is it gonna hold this? Uh-oh, that looks heavy. That looks heavy because look, there's no wick on that candle. So you're gonna see a great move. There you go. See that? That's a great move because when you see wicks like this, when you see stuff with no wick like that, that's bound to get filled heavy. So that's why I'm mindful of those. Okay, took out liquidity. I like that. I like that. That looks really good. That looks really, really good. Let's see. Let's put this block back up in here again. Put this block. Keep these highs. See if it respects, right? Make this red. I'm gonna make this blue. Make this blue. Okay, here we go. Look how high. Look how I took it out, right? Perfect. I might try a long. Let me see. How many minutes I got left on the 5? 1 minute on a 5. We didn't get the break right here, which is alarming on a 5 minute. We didn't get the break on a 5 minute. 15 minute, got the break though. It looks good. That's okay. We didn't get the break. Look at that on a 3 minute. On a 2 minute, looks good. I mean, that's not bad. It's not bad. We're gonna see. We're gonna see. Break of structure. Can we get that break of structure? 5 minutes still printing in, right? Okay, here we go. Okay, it's holding this range. I like how this red candle held this. I'm gonna go in 5. I'm in 5 right now. I'm putting my stop at the lows. I'm willing to risk $217. I just want to see what happens. I'm gonna risk it, even if it takes it out. That's cool. You know, you don't have to always be right. That's the catch. You don't have to always be right in the market. The 5 minute prints in 22 seconds. I could have waited for the 5 minutes to print, but you can always get back into the market. If you get stopped out and it takes you out, but the market goes back into your favor, get back into the trade. Whatever, how much you're willing to risk. We got 8 seconds left. I might be a little early in this trade. I should have waited. What you mean by waited? I should have waited by like the candles telling me how it's playing out. So see, okay, it still looks heavy. It still looks heavy. It might take out some liquidity. Okay, 5 minute printed above. I like this, but then at the same time, it still looks heavy. We're gonna see. We're gonna see. Oh, we didn't get the break right here on the 1 hour. This might be alarming. I gotta be careful right here because I just realized something. This candle, actually it did break that. It didn't break this high. So this could be a fake out. We're gonna see. We're gonna see right here. This candle right here is telling me, let's see. Can we hold this range? We got this block right here though on the 30. See this block? Can we hold this block? Look at the 5 minute. Yes, we can. I might add more if it respects. Let's see. It looking good, looking good, looking good. Holding this fair value gap. Come on, keep holding. If it doesn't hold, I'm not gonna add more. I'm gonna wait. What's up, Kelly? Just be patient. Just gonna be patient. Let this market kind of play out. I don't like this. I don't like this. This is what I don't like. I don't like the constant drag down. You see what I'm saying? I don't like that. Now we did break these fair value gaps, which I don't like. Get rid of this. I don't want to see us respect these fair value gaps and then continue to drop. So I might get out of it, get out partials if we don't hold. Market is volatile right now. You see a lot of wicking, but you don't want to get nervous. There you go. It looks good. If we can break, we got 35 seconds on the 1 minute. Okay, I can get rid of this. Can we hold this level? Get rid of this. Get rid of this. I don't confuse y'all. Can we hold this range? I like that we respecting this block on the 30. I like the 5 minute dash respected this. I like how it looks. It swept the lows, right? It tried to take us out, take out liquidity. I like that. Wait till this 1 minute. If this 1 minute can print above, I would like to see a continuation. If this 1 minute can print above these wicks right here, then I would like to see a continuation. If not, then we're gonna range. See, we're gonna range around. So you want to be careful about before you add. Okay, this is tricky. I like this for the longs. This looks good. See how this is stacking across? I like this. This looks really good. Can we hold this range? So I'm just constantly waiting. It's wicking around though, so you want to be careful when it's wicking because it's volatile. The wicks are just as long as the candle. When you see a lot more longer wicks than you see candles, be careful, right? Be careful. So what I might do is I might scale out. I might say myself. See, I just got out of it. I might save myself some. So I got out of 4 micros and I'm down $5. I could have been down 200, right? If I would have kept it. But if it gets back above, I'm adding more, right? So you want to be careful and mindful on how you get in. So it's wiki. Nobody knows where it wants to go. But as long as it's respecting this block. So right here, see it? As long as it's respecting this block, we should be good. If it don't, then it is what it is. See? Really volatile market, but it's okay though. Can we hold? Can we hold? That's the question. If we can't hold, oh, we got a fair value gap right here, so that's good. Fair value gap right here. I like this range. If it holds this range and get back up to where we at, I would like to see this go for a push. If not, then it's breaking. One thing I don't like is how the block respected this fair value gap underneath. That's what I don't like. I don't like how we respected this with the wicks, and I don't like how we respected this under the fair value gap. See this block underneath this yellow? That's a red flag to me. Like, okay, be careful and be mindful. But at the same time, we hit that fair value gap on the 2-minute. That looks good. We're gonna see. Does this market wants to continue to sweep the lows, or does it want to fake us out and it's sweeping? We're gonna see. These are the tricks that they set up, the traps that they set up on Fridays and Mondays or whatever time of the days. All right, respect the stop. Remember, we gotta respect it. You can get out if you want to, but if it doesn't hit it, it doesn't hit it. That means you're still in the trade. But if it hits it, then you good. See, you're like, oh, it's about to hit him. He's about to get out. But what if it doesn't? Right? What if it doesn't hit my stop? What if it respects it and goes back up to the highs? How would you have known if you would have set the stop? You're supposed to respect the stop. Right? But we're going to see right here. But it looks like it wants to hit it, though. We're going to see. Still got this 15-minute. It looks like I want to sweep. And I'm about to get hit. All right. Down $47. Not too bad. I'm not mad at it. What I'm most happy about is the fact that I scaled out. I was in 5 micros and I scaled out because I did not like how the candles got underneath these fair value gaps. Okay, so it swept the lows. Not mad at it. So it swept and what happened? It shot back up. What did I say earlier? If it sweep the lows and sweep your stop and it goes back up to the highs, don't be afraid to maybe get back into this trade. So what I'm going to do is I'm going to wait till the market get back above these fair value gaps right here. Let's see if the market get back above the fair value gaps. Okay. Can it stay above these fair value gaps? Let's see. You don't have to rush. It's no fear of missing out. Don't worry. The market going to give you more opportunities. Okay. Can it hold this range? Even though it swept me out, did the little stupid sweep, you know, it always does. Okay, it's holding this range. I like this candle on this green candle. I like it. Can we hold this range? Okay, very volatile. Still waiting. Still waiting. Here we go. Okay, having a nice push. Having a nice push. I'm not scared. Oh, I'm missing out on a trade. You're not missing out on a trade. Just be mindful on what's happening. I want to see it close. I want to see how this candle closed. You're not trading volatility. You're trading candle closure. You want to see how the candle closed first, and then you might take your trade. We got right back above the fair value gap, which is beautiful. On the 30-minute, we got right back above. Try to sweep, but guess what? We couldn't break this. Look at that. We couldn't break that. It just took out liquidity, which is okay. I'm about to get back into this trade. It looks really strong. Where's the entry? This thing is lagging. All right, so I'm back in higher stop and I'm going for these highs. So what I'm gonna do is I'm gonna add more to this trade. I believe in this trade now. It closed above. Right here, what happened? When I say when it closed above, it takes off and it does it a lot. I'm in 6. I want to add more if it holds this level. This market is really volatile though. So let's see. We should be going up now to these highs. All right, so I'm in 7. We're gonna let it ride. But be mindful. Don't take the trades unless you're willing to handle the risk. Wow. Lots of fake outs. Lots of fake outs. But be careful though. Don't be scared though. If it plays out, it plays out. If it don't, it don't. It is what it is. Whatever you're willing to risk is what you risk. I like it. I'm adding more. Don't add unless you're willing to risk whatever you risk. What are you risking? I'm risking 628 on this for a profit of 506 on this. I'm gonna add more. I like this trade. I'm adding more. I like it. I really do. If it breaks on me, I'm risking 905. My max usually for a day is 1,000. I want to risk 1,000 on this trade. I like how it looks on the 30. I like how it looks on the 1 minute. I like how it looks on the 2 minute. It looks strong. No matter how strong this wick is, it could not break. Excuse me. It got back above the fair value gaps. It stayed within this range. Bounced at this fair value gap right here. I like it. Now if it bounces up and down, then that's cool. 2 minutes left on the 5 minute. Oh, 2 minutes left on the 15 minute too. That's alarming. I should have waited for that 4 hour. 4 hour Princeton, 16 minutes. What's up, Abdul? 5 minute fair value gap was right here too. 15 minute fair value gap was right here too. How did I miss that? Let me get rid of these. Let me get rid of these. I missed that. That was a big one. How did I miss this? Sometimes looking at the time frames a lot can really miss. But that's what sharpens your skills though. Look at a 1 minute. Ooh, nice respect on a 5 minute. On a 15 minute fair value gap. I like that. It looks good, but we got to hold it. Let's see if they can hold this. Man, this market is really volatile. Oh wow, I hit my max. Wait. Hold on. What in the world? What in the world? How did I hit my max? Oh, I used the old account. Give me 1 second. How did I hit my max? Just bought this account. Let me go back to Top Step and see what's going on my dashboard. That's crazy. Give me a second, y'all. There's no way I hit my max on that. No way I hit my max on that. 600? No way, something's wrong. That was only 600. Make it make sense. It literally just kicked me out. Bear with me. I can't believe it literally just kicked me out of that market. I'm trying to see if I can get back into my account. What was that about? An account there. That's crazy. 1, 5. Let's see what happened. Why did it kick me out? Yeah, I don't understand. That's weird. Hold on, y'all. I'll be right back. Give me a second. Alright, I'm back. I don't know what happened to my account. I only lost 600 and I ain't really, it was like a brand new account, which is weird. That is so weird. It just logged me out. What in the world, Top? Bro, what? What? How they close? They fund my how? What? They closed my funded account. How is that possible? No way. No way, bro. Look at this. Am I tripping? Y'all gotta see this. No way. Y'all still in here? Look. Oh, hold up, wrong. Hold on. Look at that. Hold up. What? Funded account closed. What? What? Off of that little bit? No way, bro. Something's I gotta talk to support, y'all. It just sent it to me. I'm gonna show y'all. Give me a second. That's crazy. That's crazy. And I ain't really did much. Like I literally didn't even do much. It was literally just $600. Like that was it. Y'all tell me, am I tripping? I'm gonna show y'all right now. Give me a second. Give me a second. That's crazy. No way. No way. I'm gonna show y'all. Give me a second. They closed my funded. How? I do not know. It has to be a mistake. Some error or something. Cause ain't no way. Bro just got that. Ain't no way. Ain't no way. Ain't no way, bro. I don't know. I'm gonna show you right now. Give me a second. That's weird. Like I just got like no way. Give me a second. I'm gonna put it up so y'all can see it. Give me a second. What the world? I'm gonna have to talk to customer service. I mean, I don't really trade but one account for all my prop firms, cause I don't like spending much money on them. Let's see. Oh well, it's all good though. I mean, shoot, it is what it's just an account. It's not like it's life, you know, life or death. All right, let's see. That's crazy. What in the world? All right, I'm gonna put it up here so y'all can see it. Give me a sec. They just sent it to me. What is it? What is this? What? Make it make sense. With that little bit, ain't no way, man. Something's up. So how you having a good day? I used to watch your reactions back in the day. What's up, Center Mystic? Bro, y'all gotta be trolling me with a name like that. I'm doing good. So crazy. I'm doing pretty good. It's going all right. I can't believe this. This right here got me. Y'all see this? How? How? Right? But it's okay though. I'm gonna see what's going on. I'm gonna see what's going on. No big deal though. No big deal. It is what it is, you know? It's just, it could be a computer bug or error. It could be something. It could be anything. It's all good though. Every trader make mistakes. It's all good though. I mean, I would put on the other app, but it's too heavy in volatility. I mean, it's too, it messes up the stream. The load and the data loading on it, it messes up the stream. Yeah, slow me down. But it's all good though. I might just cut the stream short, you know? I might just cut it short. I don't understand how like that. I still had like a whole 2,000 drawdown. Still had a whole drawdown. Literally. We're gonna see. I made it as a kid, sorry. That's all good, man. No judgment, no judgment. No judgment. Just caught me off guard. But it's all good though, you know, it is what it is. You know, things happen, mistakes happen, computers happen, bugs happen. It is what it is. All right. But could be, you know. And I have another one that I haven't activated, by the way. I have another one. I will show, I mean, actually I can show you. Let me show you. I still have another one that I haven't activated. I don't want to be too like, oh yeah. Still holding on to it. What is it? What's my thing? I want to show y'all everything, all of my codes and stuff. Still got another one, but I'm gonna do it later though. I'm not gonna just do it right now. What is it? What's the thing? Oh, 6. Dang. This is the second step I use. I use second step to log into my stuff. Alright. Let me get rid of this off the screen. It's nonsense. Let me get rid of it. Alright. So let's see. I don't want to see if it don't show anything. I don't want it to show my personal stuff. I still have one I haven't even activated. Here we go, right here. But what's that? Boom. Make sure it don't show. I want to make sure it don't show. Website, window capture. Yeah, okay. I gotta get rid of some stuff. See, I can't see my little thing. Here we go. See, still got one. See? I still have one that I haven't even touched. You see how it's glowing? Still haven't activated. Still gotta do it. I don't want to press it and show all my card information or something. So it's been sitting here. I haven't touched it. Just to, you know, whatever. But yeah, it's okay though. Whatever happens to the other one, I don't understand. I gotta see what's going on with that. Other than that, y'all, I'm hopping off. I'm hopping off. That's it. That's it. It's no point of even sitting around. I'm gonna spread the word though, cause I feel like that's more important than anything. Yeah, I'll probably catch y'all. I mean, yeah, it's been sitting there. I haven't activated it. It's just been sitting there since the 7th. Yeah. Yeah. Oh yeah. Of course. Yeah. For sure. Tops is one of the top. Top Step is one of the top prop firms. I like Top Step. I like Tradeify. I like Apex, but man, their rules are hard. Their rules are rigorous. I like Top Step, Tradeify, Apex. I like a lot of them, but I mainly use Top Step. I just love how simple their whole layout is. I love Top Step X. I love the way their platform is made. They just make it so much easier, you know. I like it. I like it. I really do. Really do. I don't know. It happens. I mean, shoot, we all good though. I mean, you blow it, it don't work. It's something's gonna always be an issue and something, and it never goes away. Is there a buffer for payout? What do you mean by buffer? I don't understand what buffer is, but what do you mean in your terms of buffer? What do you mean a buffer? Like, is there like a certain limit you have to reach for payout? What do you mean a buffer? Because I don't think they really use that term in their rules. I can't believe he really got me out of it. It's crazy. Ooh. Is there a certain amount, like, was there a certain amount that you have to make to take a payout? So let's look at Top Step's rules, right? Let's look at Top Step's rules. Let's see, where am I going? Let me get rid of this. Let me go on my computer. I don't want you seeing my stuff though. I don't want to show too much of my stuff. Give me a second. Give me a second. Give me a second. Alright, I'm gonna put that in the back. Give me a sec. This is my background on my computer. Y'all seeing behind the scenes. I mean, no. So like, let's say. All right, let me get to it. Let me go ahead and do this real quick. Let me do this. Top Step. Oh, that's not how you spell Top Step. Top Step. Go to Top Step's page. Right. Let's see. Top Step's page. Not Interactive Brokers. Not Tradeovate. These are brokerage accounts to trade your own capital. Right. Not Tasty Trade, Tradeify. They're advertising these accounts. Tradeify is really good, right? Where's Top Step? Top Step right here. How to get funded, right? So become a funded trader on Top Step to trade your own prop firm. I mean, trade your own stuff. And if you're new to the dashboard, you get 25% off for your first month code with -25. Can y'all see that? Let's get rid of this. See, I can't see what I'm seeing. Actually, it's cool. I'll keep it up. No big deal. No big deal. As long as you ain't saying no personal information, we good. We good. Okay. Top Step X is what I use to trade, right? You can, if it's your first time using Top Step X, you know, you'll click here to get started. Use that code at checkout -25, get 25% off, which is really good. That's the only time you're going to get 25% off, because remember, Top Step doesn't use promos. So when it comes down to getting a payout, let's see. So here you go. You got a 50K account, you got a 100K account, you got a 150K account. One costs 49, 50K 49, 100K 99, 150, 149. They're literally like $1 off underneath or what they're advertising, right? So it's so crazy. If you spend 50, if you want a 50K, you get 49, 100K 99, 150, 149, right? You got your profit targets right here. 3,000 for the first one, 6,000, 9,000. Max position of contracts that you can use. You can, when you're in the combine, you can use 5 minis or 50 micros, 10 minis or 10 micros, 15 minis or 50 micros. I mean 15 minis or what's 50? 150 micros. The max, if you blow an account, the max you can go under until you blow an account is 2,000. So if you go under $2,000 in one day, the account's blown. For the next account, it's 3,000. For the next account, it's 4,500. That's the max you can exceed before you hit your account, right? So if you're starting at 0 and you go down 2,000, account blow. For the 100K, if you go down 3,000, account blown. For the 150K account, if you go down 4,500, account is blown, right? So let's say about payouts. Let's look for payouts. So that's what everybody wants to get to. What is a payout? Like, how much is the payout? What do you do about the payout? They changed the website a lot, so I gotta see. Let's see. I will watch one of the videos, but I'm trying to see if they have the explaining. Let's see, payouts. Resources. Free coaching. Our programs. Express funded account. Here we go. Express funded accounts. Here we go. See, can y'all see this? Right, there we go. Get funded, take payouts. Top Step offers the best payout policies in the industry. Yes, they do, by the way. Even when they got straight to funded accounts where you don't have to take a combine, you go straight to funded, they're just so expensive and they have buffers. Top Step doesn't really have a buffer. Like, they don't have a consistency rule. You know what I'm saying? Buffers is usually you got to reach a certain profit target, and then there's a consistency rule of 20%. When you get into a funded account, there is no buffer. There is no consistency rule. They might have one. They might say, dang, you made $100 one week. I mean, one day, 300 the next day, but then the next day after that, you make 50K. They're gonna say, hold on, hold the horses. But if you're making 1,000 one day, 2,000 the next day, 600 the next day, then that's okay. That's fine. You know, when you get into a funded account, there is no buffer. There is really no consistency rule. Like, there's literally none, unless you're making a stupid amount of money in one day. Then they're gonna say, hold the horses. You made 100K in one day. What's going on? All right. Let's see. What's that? Back to funded is when you have a funded. Back to funded is when you have a funded and you blow your account. If you blow your funded account, you can reactivate your funded account for $4.99. The next account size is $5.99, and then the next one is $7.29, right? So on and so on. So you can reactivate your funded if you blow your funded account. Let's say you pass your combine and you pay for your funded, and then you blow the funded. Now you can reactivate it, and within 5 days, I think you have like 5 days to reactivate it, something like that. All right, here we go. What is it? A clear path to live. I mean, you can go to a live account, but that's fun. That's another story. Do they have it? Where's it at? Back to funded, path to live, payout perks. Here we go. This is right here. Yeah, Apex rules are crazy, but it's nothing wrong with Apex. I would trade Apex. You know, there's nothing wrong with Apex. I mean, they have a great system. I like how cheap they are with their accounts. But with Top Step, you know what's crazy? I'm still with Apex, but I started off, when I first started trading, I was with Apex for like a year, literally a whole year, until I found Top Step and I just traded them. So right here you have, let me see if y'all can see it. Right here you have Top Step, simple payout policy. When you're in the funded, earn a payout after 5 winning days of profits 150. So you have, if you can make up 5 winning days, you got 5 days, and if you make 150 on each, you can take a payout up to 50% of your account. So right, let's see. Let's do the math. Right? What's 150? 150 times 5. So 150. So you gotta have at least 5 days, 5 winning days in your funded account. 150, 150 or more. It could be or more, but no less. 150, 150 or more, 150, 150 or more, 150 or more. That's $750, right? You made, let's say you made at least 155, 156, 100, 200, whatever, right? Let's say you made about $750. What's half of $750? So you take half of $750 and you can request half of that, which is $375. You have to have at least 5 winning days of 150 or more. It could be even 2,000. Let's say if you made 1,000, 1,000, 1,000, 1,000, 1,000. That's $5,000. You made $5,000 within 5 days. 5,000. Take half of 5,000. You can take out 2,500. There is no buffer. There's really no consistency rule. Now they're gonna be flagging you if you make some stupid amount of money. Like if you made $100 one day, 1,000 one day, then you made 30K in another day. Like okay, they're gonna be like, wait a minute, hold the horses. But there's no consistency rule and there's no buffer. Right? So if you have 5 winning days of $150 more, it could be 2,000, 3,000, whatever in each day of 5 days winning. You can take up to 50% of your account, right? So right here, simple payout policy: earn a payout after earn a payout after 5 winning days with a profit of $150 in 5 days. Each day gotta be at least $150, right? Keep more of your profits. Keep your first $10,000. So if you haven't made it to $10,000, you can keep up to 10,000. You can keep 100% of your profits, right? But after you made a total $10,000, it would take a 90-10 split. So if you took out at least, I think I took it out at least more than 10,000. If you took it out more than $10,000 in profits, I mean, if you took it out, if you paid yourself out at least 10,000, and if it was if you said, let's say if it was a payout of 10,000 in one swoop, after 10,000, they take out 10% of your 90%. But if you haven't made it to 10,000 yet, you're gonna keep 100%. So that's common sense, right? You keep the first 10,000, and they take 90%. No, you take 90% after that, which they take 10% of that of your payouts. You get faster payout processing. So payouts are processed daily, so you receive your earnings quickly. I mean, I'm not gonna say they have the best payout. They have the best payout processing because you might receive your stuff in like the same day, or you might receive it in 2 or 3 days, or even 5 days. That's from what I've seen. And you can also earn, I mean, like everybody else, right? No, what is this? You can also earn payouts from multiple accounts. The most accounts you can have is 5 express funded accounts. See right here? You can have 5 funded accounts. And you can take payouts up to 50% of all accounts. So you can have 5 funded accounts, and you can take out half of your account from all accounts. So let's say you got 5,000 on this account, 2,000 on this account, 3,000 on this account, 5,000 on this account, 6,000 on this account. Don't matter. Even if it was 5,000 across, you can take up to 50% of each account, whatever the profit max is on there, right? There's no buffer, there's no consistency, so you'd be good on that. So it pretty much explains it. Real simple. So real simple. Let's see. Let's earn funding. Wait, we got this. Let's earn funding. Let's go back. Right. Let's earn funding. So you knew the top step, knew the Apex. And even if I did Apex too, I'm gonna do Apex up here too. I like Apex. Apex Trader Funding. You know, you can press that code above. It's in the chat. I'm rejecting because I don't like the cookies. I only like real cookies. Let's see. Let's look for an account. Apex Funding, right? Tradeovate. You could trade a Rhythmic, which is Ninja Trader. It's what you want. You can select your platform. You could do wealth charts, which is more of a traditional type of trading style, I think. Wealth charts is more of a traditional. So look, so you're like, what do you mean? What is a wealth chart? What is a traditional? What is all this stuff? So look right here. There are different platforms that you can trade. It's a wealth chart, a Rhythmic platform, or Tradeovate. I personally trade Tradeovate because they're way more user friendly and much easier to use. Some people like to use Rhythmic because it's more. Ninja Trader owns Tradeovate, but Ninja Trader has more of a traditional style. If you want something more technical, then I would go Rhythmic. If you want something more old school and more like depth of market and more like intuitive design, I would use wealth charts. But if you want something more simple, user friendly like an iPhone, like you use an iPhone, then yeah, Trade of 8 for sure. Trade of 8 is so friendly. It's so much simpler. So I use Trade of 8, right? Let's get back to it. Trade of 8, put this back on 50. Oh, actually 75, 60, 75. All right, here we go. Actually, let me bring it down some. So, right, let's see. Let's look at this. Let's look at this. Let me drag it down. So this is Apex. I mean, yeah, TradingView is good. I like TradingView too. I like using TradingView integrated with Trade of 8. I like that. But you have to, with TradingView, you have to pay for data because this is its own platform. So if you're new to this, if you want to get started in trading, you will either trade your capital, right? You will trade your own capital, which is going to be with a brokerage account. But if you want to not trade your own capital and just trade a prop firm, which it can provide you with accounts, you can either trade Top Step, which I'm using right here. This is Top Step. See right here, Top Step, or you can use Apex. And they got many more. They got Top Step, Apex, Traderify, Take Profit Trader. They got so many. Up Futures Trader 1. That you got so many kinds, right? So Top Step is pretty simple. You get 3 accounts. They don't have a lot of platforms. They only have one platform, which is Top Step X platform, right? The only platform they have is this. This is it. You can trade a 50K account based off your sizing, but the cost is different. So when you pick an account, the cost is different. So if you go with a 50K, 100K, 150K, the prices are different because the sizes are bigger. The smallest one is 50K, and obviously the largest one is 150K. But the price difference, if you're first time using this, you can use code -25 and get 25% off, right? You can read the targets with the profit target. To pass these accounts, you got profit target, the amount of contracts you can use. When you click in how many contracts you're going to use to get in, it's right here, 5 contracts, and a maximum loss limit, 2,000. All right, so that's pretty simple for on Top Step. You pass the combine, pay for the funded, and you can pay yourself out. Pretty simple. Apex, you got 3 types of platforms you can use. And you can choose from any account size you want. You know, choose any account size you want. The bigger the account size, the bigger the drawdown, the bigger the payouts, right? Remember that. The bigger the account size, the bigger the drawdown, the bigger the payouts. What's a drawdown? The drawdown is the max amount you can lose before the account is blown, and you have to start over again, right? So if you go with a bigger account, you get a bigger profit target, and you get a bigger payout. Obviously, you know, the more money you spend, the better the benefits. But the more chances of you gotta, you know, take more risk. So here we go, right? You got 25K, 50K, 100K, 150K, 250K, 300K. You got a lot of account sizes that you could choose from on Apex, right? You can go with now you might, okay, what platform am I trading on? Apex provides you with the platform. You get to choose between 3. You could choose a wealth chart, you could choose a rhythmic chart, or you could choose a Trade of 8 chart. I use Trade of 8 because I like how user friendly they are. You got all kinds of charts out there, all kinds. It depends on how you like to use your trading, how your trading style is, right? They got all kinds out there. So you can choose between, if you want to stay conservative. Let me see. You can't see it. If you want to stay conservative, you can trade a 25K account and spend using my code. That guy. Let's say if you want to use that code, that guy, right? Let's say you go here, but you gotta, I think you gotta sign. Do you gotta sign in first? No. You gotta type in your information, right? You go in, even if you already logged in, you can once you get your new account, you log in, put in your full name, your email address, your username, your password, your zip code, your address, and then you type in your coupon code, which is, for me, that guy, and you get a check mark over here. You get a check mark over here that says you got the green light. You get the check, you get the code. Now here's the thing. Here's the thing. I can't use my own code. I just can't, because they won't let me. So the code you can use if you're using your own account can be saved now, or you can be that guy. You know, you might say, oh, these prices are harsh. Look at that, 167, 187 a month, 297 a month for these accounts. But if you're using a discount code, which is 80% off, it's right there. You can't miss it, right? 80% off, literally, and it's in the chat. It's literally, where is it? It's in the chat. Pin to the chat. 80% off. Use that code and get 80% off. What's 80% off? 176. If you want to go with a 25K account. So let's see, 176 times 8. Did I typed this wrong? 167 times 8. My bad. Minus 167. $33 for an account. You will spend $33. And sometimes, right, 80% off if you use that code, that guy. Whatever account you go with, you get 80% off with Apex and use that code, that guy, right? Now, if you want it to be special, that's cool. If you want it to be special, some days we get this. Bow. This happens sometimes. Oh, hold up. I didn't mean to do that. I did not mean to do that. Give me 1 second. Bear with me. You might say, that's still kind of expensive. $30? Man, that's a lot of money. Like, why would I want to spend $30 on that? Here you go. This ain't out yet. 90% off. They do this every so often. So when these 90% offs come out, when you see a 90% off, when I tell you in the chat, oh, that's a 90% off deal. It's not 90% off right now, but when there's a 90% off, trust me, those accounts be cheap. $13, $15. You don't want to be missing those accounts. And you can pass these accounts in one day, by the way. So it's not 90% off right now, it's 80% off. So you might say $33 is a lot of money. But at the same time, when 90% come out, you better be mindful. When it comes out, that's it. You better get it while you can, because they might do it next 2 months later and you have to wait for that. So 80% off for the smallest account, 80% off for the smallest account, right? Which is a 25K account. 25K account. It says 167 down here, but if you do 80% off if you use the code, that guy. And then, you pass these accounts in one day. You can pass the account in one day, get funded, and you start making yourself some money. Real simple. This is how you make yourself money. If you don't want to use your own capital, if you don't want to put your own $1,000 into the market and be afraid that they might lose the money, use a prop account. Usually prop accounts, they work. I get paid out a lot. Excuse me. But I'm gonna keep talking about this, so I know a lot of y'all be confused, because a lot of y'all ask the same question: what is this? What do you trade? And I'm like, man, this is crazy that y'all don't really know. It's funny how trading has been around for so long. I've been trading for 3 years, and it's funny how trading been around for so long, even years before I've even known about trading, and that a lot of people don't even know about it. And this could change lives. All you need is a computer and your brain and some internet, and you're good to go. Literally, just a computer, even your phone. You can even trade on your phone. I'm so serious. You can trade on your phone. It took me. Let me see if I can find my first payout. See if I can find it. Let me see if I can find that first date when I got my first payout. Let me see. My first payout. Ow. My back and my neck. My first payout. How long did it take to find my first payout? Let's see. Let me see what year it was. Oh, hold on. I can do from. I can do dates, I think. Oh, no. Well. Nah. Dang, I went all the way back. Why didn't I show my payout? Give me a sec. My first payout was January, February, March, April, May. May of 2023. My first payout was in May of 2023. 2023. That was like what, almost 2 years ago? And it took me like it almost took me a year to get a payout. It almost took me a year. 2023 was my first payout. Can you believe it? Can you believe it? I mean, a lot of people took years. I mean, let's see. It's gonna happen. When it starts happening, at first I thought it was the hardest thing. I really thought getting a payout was probably the hardest thing to do. And it was for me. It was tricky. I'm not gonna lie. I was scammed so much. I was bamboozled in so many different trades. I just had so much going on, and I couldn't find my edge. And I can tell you right now, there's a lot of people making a lot of money in trading, like a stupid amount of money. And I'm pretty sure they went through a lot of ups and downs to get to the point where they at. I'm not saying I'm the best. I mean, I'm probably far from the best, but payouts. Your first payout may seem like it's the longest road to the longest accomplishment ever. But the moment you get it, the moment you're like, wait a minute, this is much easier than I thought. Like it just starts clicking. It's like almost like being at a cash register. It's like your first day at a cash register, you're like, oh, I'm scared. Like, oh man, like people, and then you start doing it so often. It's like, man, this thing is so repetitive. It becomes second nature. It's gonna change. Now, don't get me wrong. There was a season where I couldn't get another payout. There was like a season where I was like, man, what's going on? Because I was so greedy. But once you realize that it never was about the payouts, it was always about your trading. Wait, first of all, how did that market do? How did NQ did? Let me check. Did NQ had a continuation? Did NQ continue or did it drop on me? It did. Wow. Amazing. No, it did it. How amazing. How amazing is that? How amazing is that? The trade played out. The trade played out. Wow. Wow. The trade played out. Wow. That would have been a nice up. Yeah. Wow. The trade did play out, but you know what happened to my account? It just did whatever. But whatever, I get to it later. It doesn't matter. Payout's gonna happen now. You might. It happens. You know, it is what it is. But yeah, what am I doing? What am I saying? Let's see. So yeah, payouts. I mean, I had a bunch. I'm gonna see. I don't know if you ever been here. Let me see if I could show up some payouts I had. It's been a while. I've been taking out small payouts recently though. I haven't really been taking out a lot of money at all. Let's see. I'm gonna call it P. See if I can find my payouts. See if I can find them. See if I can find a lot of them so you can like, okay, that's cool. I have a lot of blown accounts. Interesting. Oh, here they go. I know people say seeing is believing. People like saying seeing is believing. Believe in the trade. Never cut that trade early unless you believe in it. Believe in it. You say it's gonna go there, it's gonna go there, no matter how much craziness is happening. You seen how crazy the market got. And it's Friday, you know. Fridays are one of those days you want to be careful because it's like, okay, I don't want to risk too much, and I know Fridays it does crazy volatility. So always be careful on Friday, especially after like news and stuff. I'll show you some more. Did I show this one already? I did show this one already. No, I showed this one already. My bad. Let me get rid of it. I showed this one already. I'm just going through all these pictures. Did I show this one? There you go. July, March, July. It's okay though. It's not about this money. It's all about trading. These are payouts. Congratulations, congratulations. Just, you know. I can't wait to hear it. I can't wait. You know, can't wait to hear it. I even show my losses. Y'all see when I show my losses. I show my losses. I might show the. I don't really show the wins, and I don't show the payouts a lot at all either. I don't. Even I take small ones. You know, I don't want you to think, oh, they just, man, those are 2,200, 2,500, 1,900. Oh my goodness, this dude takes out big payouts. The last two payouts was only 250. Cause I just wanted to just take out a little bit, just to kind of. I don't want to see my account keep shrinking. I just wanted to grow my account, and then I blew my account because I went too heavy. I've had small ones, you know. They got people out here that taking 10, 20 every payout easily, and I've seen it. I see it a lot every day. These are just common, like obvious payouts you could take from Top Step or Apex. All right. I got more. I don't want to fill this whole screen up with a bunch of like papers and stuff. Yeah. Yeah. And then I spend all the money. you get it, then you spend it. You know, you invest it or whatever. It's gonna happen. It's gonna be there. Y'all can do this. Y'all can do this. We can do this. But we have to do the right thing when it comes to trading. You have to follow the trade, not the dollars. Once you follow that, you're going like, you see me when I was getting in, I was like saying, I want to make 3,000. I'm saying, you know what? I want to go for those highs. I want to go for those lows. I want to take that trade to this point, and the money gonna follow. All right. So yeah. So I had a good month. That month of July was crazy for me. July was crazy. 22.15, 25.10. Man, July was killing it. You see the date right here. All right. I was killing it that month. Yeah, believe in yourself. You got this. This ain't nothing. This to me is small. So they got people out here that's like, man, I just want to be up here. And then you right here. I'm probably right here, but I want to be up there. But it's okay because some people this is you right here, and then there's somebody right here that wants to get to that. So you're doing good, you know. You're not that far off than you think, not at all. Like one day you might be coming back and telling me you made 10,000 in one month, 20,000 in 1 month, and you gonna be like, this is nothing. Might be really good at it, you know. You might be really good at it. I might just be a teacher or a vessel to get you to that point. But if you do, I really believe it's not about the money. You see it as inspiration, but if you put your faith in God, He'll make it happen. He will fulfill your heart's deepest desires. That's in His will. That's more important than anything, right? He will make you see 2,200 days, $5,000 days easily, just by being faithful. And sometimes I don't have to be faithful, you know. I really believe that it's not about the money. As much as I want to make it, and as much as I want to show it, I don't really show this much. Like, you know, a lot of people, they will show their payouts. I don't ever show my payouts. Like, I barely show those. I show more losses than anything. I can show you all of the blown PAs. It's crazy. But I hardly show this. Hardly. All right, let me get this off the screen. This is old news anyway. Old news. Bye-bye. Put your faith and trust in Lord, and it will work out. Not in the money. The money comes as a byproduct of you being obedient. The money comes as a byproduct as you following your rules. The money comes as a byproduct of you just putting your faith and trust in God. That's how it works. I used to have a lot of money when I was doing YouTube. For sure. Hey, I don't know. I think maybe it was an opportunity to just to show a little bit. I don't know. But when I was doing YouTube, and I'm not bragging at all, cause money is finite. It will float away. When I was doing YouTube, I was making a lot of money, and then I found myself stumbling and just constantly scrapping for money. Like, there was a point in time when I was balling, and I wasn't using God. I had all of the stuff I wanted. I could show you pictures. All of the car I could buy in the car I wanted. I was in a penthouse. Literally, I have the videos. I have it all. I was doing well, making well over 25,000 up to 30,000 a month from YouTube doing pranks and challenges. And I wasn't, and the crazy thing is, I wasn't following God. I wasn't following God at all. I was more selfish. I was self-centered. I was angry a lot. I had hatred. I was lustful. I wasn't faithful. I was just a very bad sinner. I was a wretched sinner. I was really not good. On the outside, it looked flawless. It's like, man, this guy is 25 years old, making well over 300K a month easily. I mean, 300K a year. I wasn't thinking 300K a month. That's crazy. I'll be balling, but 300K a year easily. And I wasn't humble at all, you know. And then the stool was swept under my feet, and I felt like the world was just crumbling. I was begging family for money, on food stamps, you know, door dashing a lot, Ubering a lot. I mean, I got a lot of door dashing, Ubering. Oh, you're Muslim. Wow. Well, you know, it is what it is. Yeah, door dashing a lot, Ubering a lot, just struggling. And I found God. I really did. It changed my whole fate. It changed everything. Everything changed. Because I once had it all without him, and I lost it all, and I found him, and he made me whole. You know? It says it right here. Ooh, do I have the scriptures? Right here. Let me see. Do I have it? Right here. I know you read the Quran. I'm in the Bible. I follow Jesus Christ. You know, you probably believe Jesus is a prophet. I believe Jesus is God. So yeah, that's probably where we have differences. But in Philippians chapter 4, verse 11, it says, not that I was ever in need. I have never learned how to be content with whatever. I have learned how to be content. I'm sorry. I have learned now how to be content with whatever I have. I have know how to live in almost nothing. Wait, what? I'm sorry. Now that I was never in need, right? For I have learned how to be content with whatever I have. I know how to live on almost nothing or without everything. I'm sorry. I thought that or was on for some reason. Or with everything. I have learned the secret of living in every situation, whether it is with a full stomach or empty, with plenty or little, for I can do everything through Christ who gives me strength. You know, that I thought that I needed a lot. I really needed a lot to be sustainable. I thought that I needed to have all of the money to make it in life. But if you put your faith in God, you have all you need. You know, if God is all you have all you need. And it took me a while to learn that, you know. It took me a while to learn that. So yeah, I lost it all. I lost a lot. Yes, we are brothers and sisters. We have to be good to one another. We have to be happy, peaceful with one another. Yeah, it happens. Life has already happened. Everything's predestined the way it is. It's already written. But yeah, even when you think you're going through the hardest time, grateful that you preach God and He is at the forefront and of your stream. Such a good message. I try to be. Sometimes it can get tough. I mean, streaming is a little. It can get really tricky. Streaming is really. It's one of those things that when you're in the forefront of people or in a crowd of people, you really got to watch what you say, watch what you do, and you're thinking about that constantly. What am I saying? What am I doing? How am I expressing this message, or what am I saying? And I try not to sound of myself too much. I don't want to sound like I'm me all the time. I try to incorporate the will of God a lot, and it can get tricky, Thank you. Amen. Amen. Blessings. Yeah. What else? What else? What else? What else? What else? I should be trading. I got skills. Yeah. At first I wasn't gonna get on, but I decided to get on. I was so close to like saying I'm gonna just go do something else. But yeah, let's see, what else do we have? Yeah, what else can I talk about? I guess that's pretty much it. I don't know. I'm not really in the mood. It's already Friday. Like, what's the point of trading? I could trade Monday, Tuesday. Yeah, it's okay. It's gonna always be there. It's gonna always be there. What else? Oh yeah, also I'm not a financial advisor, just letting y'all know this. I know this is funny. So y'all this. Not a financial advisor. This is a disclaimer. Live stream is only for entertainment purposes only. It's only my opinion. I'm not a tax or legal advisor or financial advisor. I'm not an investment advisor. It's all opinions, and these are the government required disclaimers and the U.S. government disclaimer, right? Just to let y'all know. This is at your own risk when you do take my trades. And just let y'all know, when you do take my trades. That's what's up. Appreciate it. Appreciate it. Everybody like, what is going on? Where's the trades at? Nah, I could trade. I have trade evade though. I'm not doing it. I need my tabs too, by the way. I don't want y'all seeing all my stuff, all my stuff. I got Take Profit Trader too as well. If you want to take Profit Trader, they pretty good, really good. Get 40% off for life. No activation fee when you use that code no fee 40. Man, how cool is that, right? Making your account. You got Top Step. Just read the stuff. You got Apex. All you gotta do is just read it. You got Take Profit Trader, right? Take Profit Trader. What else do we have? What else do we have? I don't have nothing else. Tradeify. Got so many. That's my emails. Hold on. Sorry about that. Tradeify. That's about right? Yeah, that's right. Got Tradeify. All these platforms you can trade with. I've been trading for roughly 3 years and some change. 3 years and some months. You can, man, it's so simple. So many accounts, so many platforms you look. Top Step, Apex, Take Profit Trader, Tradeify. Win a 150K growth account. Enter for a prize drawing. Yes, but I already got an account. So, right? They got their accounts right here. You can pay for. Real cool, real simple. Got their rules on how to pass the account to get paid. Project X, you can choose Trade of 8. Project X. They have a discount going on. See, these are expensive, but if you know how to trade, don't have to. There's no activation. You just get funded. Excuse me. Advanced account. Wait, hold up. What is that? Lightning funding. So you get funded. Once you pay for these, one-time fee, you pay for these, you get funded. And you start receiving payouts. Now with these, you have buffers and consistency rules. You have to have a consistency of 20%. See that? Top Step don't have that. See? Consistency rule. Consistency requirement. So you can't have, like, you can have payouts within like 3 days or 4 days, 5 days, whatever, but you have to have a consistency of 20%. So each time you trade, your total profit can be each day more than 20%, which is more rules and rigorous, right? Same thing goes with these accounts. They tell you the rules and what you can do. All you gotta do is read the rules. And when you get familiar with the rules, it's so simple. You can go on YouTube. They got countless videos on how to explain these videos. So the 4 I see that I really like is Top Step, Apex, Take Profit Trader, and Trader 5. So simple. You can use these. They got codes you can use to get coupons off. Use code SEP and you get 30% off on all accounts. You know? Literally still in the learning process. It is really worth it. Yes, it is really worth it. Really worth it. Let's go. All right, let's do this. Let's go to Top Step. I mean, that's not Top Step. Let's go to TikTok. Can y'all see? No, can y'all see my TikTok? No, let me see. Let me see. Let me do this real quick. Let's go to TikTok. Man, streaming, I ain't gonna lie, streaming is so fun. Streaming is so fun. Where's it at? Where's it at? Where's it at? Nope, that's not it. Sorry, y'all. That is not it. Can y'all see TikTok? Hold up. TikTok. All right, let's see. Let's type in, like, write this. This is because I like it simple. I like doing stuff really simple. TikTok. Is this my This my personal? No, it's not my personal TikTok. Just move this like that. Can y'all even hear this? Hold up. Let me know. Can y'all hear that?
Target 2. Target 2 is the correct answer. Why is target 2 the correct answer? Well, let's break it down, guys. So the market puts in a high.
Can y'all hear this?
Puts in a high, comes lower, displaces through that high. That is now going to be our money sweep, our manipulation. What we're looking for after the sweep is a V-shaped recovery in the opposite direction, which is exactly what we get. But don't forget, on the leg up, it leaves behind a bullish 5-minute fair value.
Can y'all hear this?
We're on a 5-minute time frame here.
Let me know in the chat.
So we get a bullish 5-minute gap, which ends up getting inverted to the downside strongly. So we mark that as an inversion. Okay, we have clean relative equal lows here at target 2. The market is now has inverted this gap. We come back up into the inversion, and that is when we execute our short model. Stop is going to be right here at the top of this bearish FEG. I'm going to give it a little room to breathe.
Can anybody hear this in the chat?
TP number 1 is going to be down at those relative equal lows. And that is the trade model, guys. That is the inverted.
Anybody? Can anybody hear those in the chat? Anybody? Anybody? I'm surprised nobody saying nothing. Oh, okay, making sure. Thank you for letting me know. Anyway, enjoy your Friday. Thank you so much for the stream. No problem. Have a good one if you're about to leave. For sure. All right, so yeah, we're trading, right? So cruise. So you just get it. Can you turn into this a full-time job? Obviously not overnight. Ooh, yes, you can. Here's the thing. You could turn trading into a full-time job. I have friends that actually full-time traders, literally full-time traders. And they're literally doing well, really well. You can make this a full-time job as long as you know how to trade. I mean, if you know how to trade and not mess up, then you're good. You know, if you're not like just doing anything in trading, you'll do good. But trading can be as hard as you want it to be. The thing is, if you want to learn trading, you know, I would type in, write this, trading basics. You type in trading basics. If you want to learn, I mean, you can watch YouTube videos, trading basics. Let's look at top. Wait, hold up. I don't want to sign. I don't want to sign in. I don't want to sign in.
Let's test
My half sister.
Let's test your trading skills part.
So for example, like this guy, you watching this guy trade, right? And he's telling you how to trade. I trade Monday through Friday because the market is only open really Monday through Friday. Crypto is the only market that's really open over the weekends, but I trade Monday through Friday from 8 to 8:30. I mean, I start at 8:30 or 8 o'clock Central Time. Central Time, yeah. So I'm usually on in the morning. I used to watch your reactions, but never knew you did trading. If you look at my channel, I got so many trading streams, so many. Look at my trading shorts. I have a lot of trading shorts. But yeah, if you want to learn trading, I would teach it. But if you want to learn trading, you probably have to do it on your own time. Because I could talk about it all day. And you could learn the basics of trading. I'm not logged in, but this guy, see, he's like, you can watch stuff like this, be like, okay, what is this? What is a wick? Like you can type in basics of trading. Like you'll go right here. I'm gonna show you. You can go right here and go on TikTok and be like, I'm gonna just type in basics, trading basics, right? But I can't press it because they want me to log in. Or maybe go to a page like trading basics. Boom. Here we go. Right? Trading basics. What is a stop loss? All right. What is a stop loss? Let's see. We're learning today. Trading learning 101 for dummies, including myself. I don't like that. A little too much. I mean, that could be a lot more easier. Trading basics. Come on, trading basics. Trading basics. Let's see if we can find a page that teaches basics in trading. Yeah, this guy just posted a guy talking. Yeah, that's not trading basics. Trading basics, man, it's not that hard. Can we just find a video? They won't let me log in. User. See if I can find trading basics. Trading main basic, okay. Let's see. I'm trying to see.
In day trading, the psychological aspects, especially fear and greed, are of significant importance. Fear can lead to selling too early, while greed might result in holding positions too long.
Bro, you used to watch my videos to fall asleep. It's crazy. Man, you was that tuned in? Wow. Wow. I should have did more different. I should have did more better stuff. For real. Yeah, they're not showing that unless I log in. Guess how I create a new one. Let's see. Let's see. Since y'all are watching, you know what? Let me put my actual account on here. Let's do it. Let me put my account on here. Let's see. How can I add my account on here? Give me a second. Give me a second. Let me find my TikTok account and add it on here. Now don't go looking at my page, bro. Don't be looking at my stuff and trying to steal my account. Let's see. How do I find it? What is my information on this? Let's see. Account information, email. I don't have an email address on this. It's crazy. Give me a second. All right. Give me a second. Bet. All right, y'all can't see this. I can't let y'all see this. All right. Hold up. I don't want y'all looking at my stuff. Oh, I completely understand it. I completely understand that I need to stop. I completely understand that I need to stop over trading. If you ask me if I understand it, go look at my shorts right now. Just go look at my shorts. Go look at the shorts real quick. You know what? I can show you. I mean, I ain't trying to brag or nothing. I ain't gonna brag or nothing, but I'm gonna show you. Actually, you could look at it. I'm gonna type it in. I'm trying to log into TikTok real quick. So I can see if people know how to teach how to trade. This is for real. I don't know if you just got here, but I just showed my payouts. I showed all my payouts to Fias. I should show my payouts to the rest of the page. If you go back on the stream, if you literally just go back on the stream, like literally just go back on the stream, you'll see my payouts and each payout for July. The only reason I'm not trading is because they closed my account for some weird reason. But anyways, let me get back to what I was saying. Give me 1 second. I'm looking for this. I gotta log into this. Give me a second. Give me a second. Could I do this? I gotta hide this. I can't let y'all see this. Give me a second. I can't let y'all see it real quick. Give me 1 sec. All right. So how do I use this? Log into Gmail like that? No? Alright, okay. What's my passcode to this? Dang, bro. Hold up. Oh, that's my passcode. Okay. We getting there. We getting somewhere. Let's go. Wait a minute. No. That's not it, fool. What's the password to this? Give me a second, bro. Give me a second, y'all. Some reason this is not working, which is so crazy. That's lame. That's lame. That's lame. I'm coming, y'all. Give me a second. Give me a second. Give me a second. I'm almost there. A lot of code pressing, a lot of code typing. All right, here we go. 9 7 0. Oh. Let's go. I'm logged in. Okay. Sorry. I'm spazzing out. Where's my TikTok at? Where's my TikTok? All right. So here we go. Here we go. Where we at? And bop. We up. We back up again. All right. So basic training. Let's look at it. So there's a lot of people that don't know how to trade, right? Basic trading. Trading basics, maybe better. Trading basics is better. Trading basics. Let's see. See what comes up. Trading basics. Now, I don't want to see people. I want to see actual, like, man, people just so self-centered. Goodness. You ain't got to show your face. Like, you really don't have to show your face when it comes to this stuff. You just got to just, like, you're talking too much, man. You can just really show the candle. How you, like, I don't even know what to press. Everything looks like everybody's, man. Man, everybody looks like an influencer. This is why I stopped doing YouTube. Oh, my goodness. No hate, though. You're supposed to teach trading, but you see nothing but you see more faces than trading. I'm looking for charts. Trading basic trading bait. Let's see. trading. Man, what do people even put? Candles. Trading candles. There we go. See, this is what I'm looking for. Something like
Here's
this.
a very simple way to understand candlesticks in trading for beginners. So, a candlestick is basically just one bar that shows you how the price of an asset has changed over a certain amount of time. So,
Okay.
here's the deal. This thing shows you the open, high, low, and close for that period of time.
Okay.
Neat, huh? Every candlestick consists of a body and a wick or shadow.
Okay.
So, for example, if you see this green candle right here, here's the open price, which is the price your crypto started trading at that time frame.
Open price at the
The
bottom.
highest price it went to, the lowest price it touched,
Right.
and the price it closed at.
Okay.
Here's a very simple way to understand
That
candlesticks
was
in
fast.
trading.
That was a little trash, but
I only trade one candle every single day, and it is so stupid simple that I regret not learning this sooner. Because after trading for 9 years, I just made
9
over
years.
$100,000 in a single month, and it was all because of this.
$100,000 in a single month,
I
bro.
just made over $100,000 in a single month, and it was all because of this. This is called the first candle rule, and all you need in order to trade it is the first 5-minute candle of the day. Okay, here's how it works. First, mark out the high and the low of the 5-minute candle that forms between 9:30 and 9:35 a.m. Eastern Time.
Okay.
Then, drop down to the 1-minute chart and wait for a break. Now, to confirm a good break, we need a specific type of behavior. And no, it is not a candle closure, and it's definitely not just a wick. What we're looking for is a fair value gap.
Okay.
This shows us that the big players are pushing the market, and we want to be on the same side of the market.
So
as
you want it
them.
to reverse
Once
back
this
into the fair value
happens,
gap?
we enter our trade and put our stop loss at the first candle that closed outside the range.
And
for your
above.
target, you just use a fixed 2-to-1 risk to reward. Now, I want you to save
Okay.
this so that you can study the strategy before it comes time to trade. I only trade one candle.
Okay. Pretty simple.
What does any of these candlesticks actually mean? Today I'm gonna show y'all how to read candlesticks in under 2 minutes. Let's talk about it. First, we'll break down.
You seeing it, bro. You seeing the shorts. I mean, it's trading's not hard, bro. I mean, it's not. It's like, okay, for example, let's say if you ask me, can you make money off YouTube? And I was doing YouTube for 7 years, literally 7 years. And people are like, I don't know how you make money off YouTube. It's like, you're making money off YouTube because you invested your time into it, because you see people live a lifestyle that you couldn't believe and that you had to see for yourself. I saw people living a lifestyle. I couldn't believe it. I tried it. It worked out, and I stopped doing it. I literally just kind of gave it up, the YouTube lifestyle, right? Same thing with trading. I seen people living a lifestyle. I was like, man, people living good. Like this looks like an opportunity that can work out for me, and I ran with it. And you might say, can I do it for a living? You can do a lot for a living. It can be selling socks. You can do it. It can be selling whatever, feed pics, and you can do it. I mean, I wouldn't do it, but you know. Let's see. Read some more. I'm actually enjoying this because you're really seeing how people make videos and see if it's true or not. But we'll see.
Candlestick, aka a bullish candlestick. In simple terms, this candlestick means the price of a stock is going up. Body of the candlestick represents the open and the close of the stock. So at the bottom is where the price had opened up yet, and at the top was where the price had closed at.
Okay.
It's coming from the body represent the low and the high of the stock. So the high.
Yeah.
This one daily candle can change your life.
I like J Cap. I like J Cap. Man, I'm on. If I had to even, bro, if you're gonna watch anybody on YouTube, TikTok, X, any social media, J Cap has some good advice. He's good. I'm telling you, well explained. He's taken millions of dollars out of payouts. He's a good example. He's a good example, bro.
What I'm talking about here is day trading using ICT's power of 3, where if you're bullish, you focus on buying below the daily candles open using the 1 hour time frame. Whereas if you're bearish, you focus on selling above the daily candles open.
All right, so
selling above the time frame.
All right, so he said if you hold on, let me go back.
Using ICT's power of 3.
Power of 3.
Where if you're bullish, you focus on buying below the daily candle.
Right. So let's say he says you're doing power of 3. So we're gonna go through all of these videos. Oh, man, I'm loving this, man. I'm gonna have to make this a series. I'm gonna have to stop trading on here and just start making this a series. He says you got a candle, right? You see this big old fat candle. You can see it. I mean, you can't miss it, bro. You just can't. Actually, Let me see. I'm gonna move this over. I think it's so much better like this. So much better like this. Let's get it, bro. Let's get it. Let's get it. Let's get some learning on. We're gonna learn today. You watch TJR? I'm gonna say JTR. JTR or TJR? JTR or TJR? Wait a minute. What this dude's name is? JTR? That's his name? I thought his name was TJR. Wait a minute. Wait a minute. Boy. Anyways, back to it. We're learning trading. This is called Learning Trading 101. While we're literally reacting to people's or traders' way of teaching basic trading. So in this beginning, JCap says that we're learning the power of three. It's when a candle prints another candle. You know, you guys see all those little candles. When a candle prints another candle, you see right here, he says that we want to, if we're trying to look for a long to go for the highs, we want to buy within the wick. And you want to buy it within this wick. So you can catch the move going up. You don't want to catch it when it's already up here. You want to be in a spot where it's already at the lows, going and then going back into reverse to go for the highs. So let's see what he says again.
Where if you're bullish, you focus on buying below the daily candles open using the 1 hour time frame. 1 hour time frame. If you're bearish, you focus on selling above the daily candles.
All right, when the market opens right here.
So let's break this down over a real chart example. Here we've been bullish, so this means we need to look for a buying opportunity below the daily candles open. Now for this, we'll use a simple entry pattern. Manipulation followed by an inversion. Where we first manipulate lower by taking out sell side liquidity below the daily candles open. Then we displace to the upside, inverting a fair value gap. This simply means that if the gap offered resistance before, now it'll offer us support. So let's enter using it. Now all that's left for you to do is wait.
Get in it. Wait
for the daily candle to expand higher to close out and complete ICT's power of three. This one daily candle can change your life.
That's not bad. So let's go over this one more time. He says that candle's either gonna print green or they're gonna print red. When it opens green, it's at the bottom. Cause look, it's opening at the bottom. It usually wicks down, because you know when you see a candle, you see a lot of wicks on both sides. Usually when a green candle opens up at the bottom right here, it wicks down. So look at my cursor, it wicks down, right? Opening candle, green candle, opens right here, wicks down, and then it shoots up for the highs and closes, right? What he's saying is you want to get in this range right here.
Buying below. Whereas if you're bearish, you focus on buying below.
So he wants you to get in this wick for the power of three. He wants you to sweep liquidity, wait for the market to get back up above an inverse, right? Which I think he was wrong. Right here, I'm gonna tell you why I think he was wrong here.
The candles open using the 1 hour time frame. Whereas if you're bearish, you focus on selling above the daily candles open. So let's break this down over a real chart example. Here we've been bullish, so this means we need to look for a buying opportunity below the daily candles open. Now for this, we'll use a simple entry pattern. Manipulation followed by an inversion.
Manipulation is when the market seems like it's about to come down and break, but it goes back in reverse. When it's manipulating, all it's doing is wicking, right? It's manipulating us to think that, hey, the market's about to go down, which is this black, or what you want to call red. But instead, it's sweeping the liquidity below to go back on reverse, right?
First, manipulate lower by taking out sell side liquidity below the daily candles open.
Right.
Then we displace to the upside, inverting a fair value gap.
See, you see how you put IFVG, which is inverse fair value gap? I won't say this is the inverse fair value gap. I would say right here is the inverse fair value gap. So see where my cursor is at right here? I think this will be the most important part to pay attention to. I don't think this will be it, but I would think this will most likely be it. This will be the better. To me, this will be more of a stronger. The reason why is I don't like same color fair value gap. See how this is a gap right here? You got this wick, and then you got that wick, and then you got this big old gap right here with a circle. That's a fair value gap. I like more of a two same colors and one different color to be considered a fair value gap. I never did like the same color. I never treated the same colors as a fair value gap. I always treated the two colors like ICT teaches and the one color, because I feel like these are invalid. When you see 3 black or 3 green candles, that's like that right here. Like, see how you would think this is a fair value gap. This could be a fair value gap, but at the same time, the market would never come back down to this. It would just keep going. But besides this, where you see green, green, red, or green, green, black, that would be the fair value gap. Besides this, I don't like that. So let's keep
This
going.
simply means that if the gap offered resistance before, now it'll offer us support.
Yeah.
So let's enter using it. Now all that's left for you to do is wait.
Ties back
Wait
into
for
that
the
fair value
daily
gap.
candle to expand higher to
Boom.
close out and complete.
Pretty good, pretty simple. So candles, so market opens, bop, sweeps the lows, sweeps that low right here, bop, manipulates, comes back up,
ICT's
comes back up, gets back above the fair value gap, and take the long. Sweeps the lows, comes back up, fair value gap, takes the long.
power of 3.
Pretty simple. It can go both ways too, upside down. Because when it's green, when it's a green candle, it stops right here. When it's a red candle, it stops at the top. Green candles open at the bottom, red candles open at the top. Green candles open at the bottom and then closes at the top. Red candles open at the top, closes at the bottom. Vice versa. Green goes up, red goes down. Opens from the bottom, closes at the top. Opens at the top, closes at the bottom. Pretty simple, pretty simple.
Here's how to trade the
Good job.
candle range theory.
Candle range theory.
On the daily time frame, identify the high and low.
Candle range theory is CRT. You learn power. You learn power of 3. This was power of 3. That's one strategy. Power of 3. Now you got CRT.
Here's how to trade the candle range theory.
Okay, you're gonna learn CRT. Let's get it.
On the daily time frame, identify the high and low of the candle as the candle range high and low.
Okay.
The next candle should manipulate this range by wicking below or above it.
Okay.
And then its body should close back inside the range.
Gotcha.
According to candle range theory, the market is then expected.
Remember, either way, it can whatever way. So you got this big old green candle. If the wicks take out either side and it closes above, now you're good. You're still in the green. It's gonna let you
break
know.
out of the range in the opposite direction of the manipulation.
Okay.
Therefore, we move to a lower time frame to look for confirmation before entering a trade.
Yes.
On the 1 hour time frame, the market must first sweep liquidity.
Yes.
Followed by a shift in market
And such
structure.
a shift. Yes.
We then consider the fair value gap
Yes.
formed after the market structure shift as the entry zone.
Wait for a pullback.
The stop loss is placed slightly below
Above.
the zone,
Yes.
and the take profit is set at the range area.
Yes. Pretty simple. So let's look
Here's
at
how
it
to
again.
trade the
So what is that?
candle range theory.
So let's say,
On the daily time frame, identify the high and low of the candle.
so you got a candle. This is called candle range theory. This is a strategy. Same thing with power 3. It's a strategy. High, low, right? Whatever side the next candle prints, whether it takes out the high or whether it takes out the low, you're looking to go back and reverse. The same way he was talking about in the
This
last
one
thing.
daily
You see what I'm saying? It's the
candle can
same
change your
thing.
life. What I'm talking about here is
It's the same concept.
manipulation.
You're waiting for it to sweep that low and then continue high. You see what I'm saying?
Here's how to trade the candle range theory. On the daily time frame, identify the high and low of the candle as
Okay.
the candle range high and low. The next candle should manipulate this range by wicking below.
All right, see how it wick? Even though it's like, oh my goodness, look how much left. Once it comes back into this point, the next move is to go back up to this point. Because when it swept this low of this candle, now it has to fill this other side of this candle. You feel what I'm saying? And it could go vice versa. So he's gonna show you the opposite side. Instead of this side, he's gonna show you the opposite side, by the way.
or above it.
Okay.
And then its body should close back inside the range.
Okay.
According to candle range theory, the market is then expected to break out of the range in the opposite direction of the manipulation.
All right. Now see right here when it swept this high, it's this wick swept this wick, and the body of this candle stayed across. This is how you have a strong confirmation that okay, we swept this high. Now it's time to go sweep this low. And this is somewhere in here is your intro, your entry. Somewhere in here, right here where my circle's at, is your entry. He's about to show you. This is imagine this is a 1 hour. The higher the time frame, the better the chance of seeing where the market may go in the long term, in the short term. So when you see a higher time frame, like a 4 hour, a 1 hour, a 15 minute, a 30 minute, when you see a higher time frame on the market, when you click the higher time frame on the market, the time frame, it's going to show you the candles in a higher time frame condensed. But when you go down to a 1 minute or a 3 minute, it's going to show you the candles broken down and where to get in the entry, right?
Therefore, we move to a lower time frame to look
Lower
for
time frame.
confirmation.
Now that green candle you saw is now being broken down into increments so you can see where to get in. So how to
This one did.
bro, come
Here's
on.
how to trade the candle out of the range. We move to a lower time frame to
Okay.
look for confirmation before entering a trade.
Yeah, so
On the 1
it's
hour
got the
time frame,
highs.
the market must first sweep liquidity,
So
followed
liquidity,
by a shift in market
structure
structure.
shift, close the
We
below.
then consider the fair value gap
value gap
formed
for-
after the market structure shift as the entry zone. The stop loss is placed slightly below the zone, and the take profit is set at the range area.
Yes. Pretty simple. So same thing right here, right? We swept that high, right? We swept those highs. CRH is candle range high. When you seen that high get swept, and when I said right, remember when I said you gotta get in that entry right here? Look, right here. Come on, you got to wait.
Candle should its body should close.
Right.
Is then therefore
right here. Oh shoot.
Manipulation. There.
Right here. This is where the entry was at. It looked for a fair value gap within this candle. So if you look right here, that red small candle you seen was looking for entry within that last red candle that swept those highs. So you put your stop at the top, you get your entry right in this fair value gap, and you take the lows. But you have to have a market, you have to have a sweep, a market structure shift. What's a market structure shift? A market structure shift is when you sweep back below the swing low that took out the swing high. It's when you take out these highs and you come back down and close right below this body of these candles. Now you know that this thing is about to set up to go short and take out the low. And all you're looking for is a fair value gap. So sweep the highs. Now it's looking for a reversal. It finally came down. Don't be scared. The market's gonna come back up into the fair value gap, and you can take your entry and go short. Pretty simple.
How's it going, everyone? In this video, I'm going to cover how to trade candle 3. With this video completed, you will now have a video on how to trade candle 2, 3, and 4, or each candle within my fractal model. Let's get into the video. Now, the main thing you want to understand is wick size with candles. We want to be trading expansion candles, which have small wicks that support expansion. You can see we make.
This is the only candle I trade every day, and it's the reason why I've made over $10,000 a month as a day trader. In the next 60 seconds, I'm going to show you exactly how I use this candle to target trends and gain massive profits. The candle that I use to trade is the one with a long wick and a short body, so a shooting star for bearish and a hammer for bullish. If I see higher highs and higher...
This is by far the most important concept.
I think when I hear certain things, I just already know that it's like it's a little all over the place
that you will ever learn in trading. So this right here is called a candle, and every single candle will have a body, which is this wide green part right here, and we will also have a wick, which is this thin black line right here. So what I focus on when I'm trading is these candle wicks like this one right here. So when we have a very long wick, this means we have a very strong reaction to either the selling side or the buying side. So if I'm looking to enter a long position, I would love to see a candle like this, but I would not want to see something like this, because this indicates that price is weak, and
it gets really technical. Once you learn about, I mean, you know what a candle is. There's a candle, there's there's a candle, there's a wick. You know that when you see what is a wick? What does that mean? A wick is the resistance. It's when it was trying to, like, say like the candle right here try to open and it try to shoot down, but it resisted. It resisted and went right back up. And then when it resisted, it closed right here. When that time, like, because these candles are on times. Like when 3 minutes are up, 2 minutes are up, when that time frame, when the timer goes down, it closes. The candle closes and prints, and then here comes the next candle. It prints, and you will see that wick. You will see the body go up and wick, and go up, down, and wick. It just wicks. But when the wicks give you confirmation on which way the market may go. The candles give you confirmation on which way the market may go. That's all it is. The wicks and the candles just help you understand is this market wants to continue to go up or it wants to go down based off the volatility, the strength, the size. You know, you really can tell. All you're doing is studying the candles, and it can tell you which way to go. And then you get into technicals, learning blocks, learning CRT, candle range theory, AMD, accumulation, manipulation, distribution, which is power of 3 by ICT. You know, you learn a lot more. Sweep the highs, sweep the lows, take out liquidity. You're gonna learn the terminology of everything. It's so simple. Once you learn the basics, it's so simple. Once you learn, oh, I get it. 2 plus 2 is 4. 5 plus 5 is 10. Once you get it, then you're going to have to learn your own math. Your own math is going to have to be your strategy. What is your strategy? Once you learn the basics of trading, you're going to have to learn what is your strategy. Like, where do you get in and where do you get out? Because everybody sees the same markets. Everybody sees the same market. And everybody have to use their strategy to get in and get their profits and get out the market and call it a day. Somebody might get into a market where it's up here. Somebody might get into a market when it's down here. It's based on your strategy. Everybody knows how to trade. Like everybody knows, oh, a candle is a green candle. It means up. A red candle means down. It opens here and closes there. It opens there, went up and closed back down here. Like, we get that. But then you have to learn your strategy. What's your strategy? What works for you to get you your money and get you out of the market? Pretty much.
This large wick to the buying side indicates that price is strong. So let's take a look at an example in the live markets so you guys can see exactly what I'm talking about. So right here we have a very nice order block.
block. And what you'll notice is every single time we come into this order block, see how these candles are getting very long wicks to the buying side. So this shows me that this zone is very strong. And this is going to be a very high confidence trade. So we can take our entry in this order block. And just by combining price action, we get a massive push to the upside for a very nice trade that we can find very consistently. This is by far the most important concept that you will ever learn.
Now he's doing respecting zones. His style is respecting zones. The last 3 you seen was AMD, which is power of 3. It's when the market sweeps down liquidity, it bases out, sweeps down, and then expands up. And then you've seen CRT, which is sweeps the candles, takes out market, does a market structure shift, goes into a fair value gap, and then whatever. And then now you're learning more of wicking, where you're seeing the Sorry. Wait, what? So let's see what you're saying. Let's see. So you say what confuses me is an up, down. If it's green first and then next is red, its body is the same height, but the wick is higher on the red. So this is a up even if it's red. What? Let me read this one more time. What confuses me is an up, down, up and down. Okay. If it's green first, okay, it could be green first. If it's green first and then it's red, and its body is the same height, but the wick is higher on the red. So is this up even if it's red? It's wait. So okay. So the market has a timer, right? So each candle has a timer, whether if it's in a 1 minute or if it's in a 1 hour time frame. Time frames condenses the market, right? Time frames is going to be a bar at the top. It condenses the market. So let's say if you're in a 1 minute, these are small little increments. But if let's say if I want to go up to a 1 hour, it will condense those time frames into one candle to show you which one was in favor, the green or the red. So when you see a market, let's say if a candle just printed, let's say a candle just printed, literally just printed. It's like, okay, one candle just printed, now here's the next candle. And it starts green and then it goes red. When that timer goes out, when it's like 2 seconds left on the timer, if it's in the red, that's it, it's red. And the next candle prints. If it goes green and it stays in the green and it prints and the timer goes out, that's green. I don't know if that makes sense to you. I don't know.
And trading. So this right here is called a candle. And every single candle will have a body, which is this white trade. So we can take our entry.
All right, let's go on.
This 1 4-hour candle will make you millions.
Millions.
And the strategy is just built on 3 simple steps. On a bullish 4-hour candle, we want to see price open, drop to a low, rise to a high, and then close higher. On a bearish 4-hour candle, we want to see price open, rise to a high, drop to a low, and then close lower. Let's take a look at an example right over here. This is a 4-hour bullish candle. Let's mark out the high and low. Next candle shows a small figure. Price goes up first and then drops down. Now, we drop to the 15-minute time frame to look for a bearish fair value gap right here. That's our entry. We place our stops above the most recent swing high.
Your entry was actually right here. You missed the trade right here. When it swept right here, you see how this green candle right here? He missed a good point. You see how this red candle came into this block right here? This red candle came into this block right here, right? Because this doesn't necessarily mean that there might be an opportunity for the shorts. So this red candle tried to print right, but it came right at this block. When this green candle wick swept this red low, as you can see right here, when this green candle swept this low right here, it stayed above this block and there was a fair value gap which he could have entered to get into the longs. That could have been a good green trade right there. That would have been a nice move that he could have missed.
It's our entry.
This right here is a no-no. There's too much risk in this trade to say I'm gonna take a fair value trade right here. I wouldn't take this. Even if it did shot down, I wouldn't take this trade. Too much risk. Look how much risk he has on this. Opposed to this, look how less risk this is. Opposed to like if you was to have something right here. This, I would have not taken this trade at all.
Please don't stop. Too
much risk. You would have had way more volatility back up to the highs. Too much risk. Too much opening. I would not took this. This right here, I would have taken the sweep of the lows right here, followed by this respect on this block. Also this fair value gap right here. I would have taken this trade off this fair value gap and taken this long.
Above the most
Look at this.
High and target before our candles.
Yeah, nah. I would not have taken that trade. That trade is too risky. Way too risky. This would have been a better trade. Way better trade. Way less risk. It's you know it's more favorable. See? So if you like to see this, yeah, that was okay, but yeah, it's too much risk to it. Too much risk.
Let's learn about doji candles.
Dojis.
Doji candles are candlesticks with a very thin body plus very long wicks. A doji candle usually means that there's a lot of resistance.
I don't know if he was talking about these.
And sticks with a
Cruz. I don't know if he was talking about these, but if it's a doji like this halfway, and it's still green, it's still green. If it's red, it's still red. It's either way, you know. Even if it's half and half, it's still whatever the color is.
Very thin body plus very long wicks. A doji candle usually means that there's a lot of resistance within the market and usually is followed by a huge reversal. Doji candles usually...
Not necessarily true. A doji can literally mean indecisiveness and indecisive market manipulation, and it can also mean consolidation. Doesn't mean that there's a chance of a resistance, because a doji can literally just mean market sideways. Because when the wicks are bigger than the candle can really show that there's not enough information to tell you where this market may go. This market can, like for example, this market can say, oh yeah, it's going up and now it's doing dojis and now it's going down. This market can say, oh yeah, it's going up, now it's doing dojis, and it can wick up and then wick back up and wick back up and wick back down, wick back up, and just keep faking you out. So dojis don't necessarily mean a reversal. A doji can mean consolidation, and to me, dojis can mean stay out the market and wait for a breakout. That's clearly what I would take from dojis.
They come in a lot of shapes and sizes, but these essentially mean the same thing. With this said, we can use doji candles to be good indicators when a market reversal is about to happen.
Not really. Yeah, kinda, but not really. Like for example, you say right here, right? Let's say, oh, this market is pumping green, and then it starts dojing out. See this? These are dojis, or you seeing that it's thinning out. You wouldn't have known that this says I want to pump and then dump just that fast. You know, you wouldn't have known that.
And this, combined with other confirmation methods, will set us up for good entries. Always make sure you're looking for your doji candles at lines of support and resistance. Reason being, because we're expecting a reversal at these areas, doji candles will be our confirmation of that reversal. Let's learn about
Okay.
All you need is this one candle to make consistent profits in the market.
It's
super beginner friendly, requires no buy.
Remember, we're new, we're in school right now, guys. Classes in session. We're learning trading.
And sets up every single day. The first thing you want to do is mark out the high and low of the first opening candle of New York session. This can be on any time.
New York session is starting at 8:30 in the morning, by the way.
Then what we want to do is wait for a break above your opening candle, retest, and a continuation towards the upside. Or we want to wait for a break below your opening candle, retest, and a continuation towards the downside.
Mention time frame when you're saying this, because that plays a big important part. Time frame. What time frame are you in?
As you can see, we have the first candle here marked out of New York session open. Now what we're going to be doing is waiting for a retest for a continuation towards the upside, or a break underneath and a continuation towards the downside.
Okay.
As you can see, we're breaking above your opening range candle. Now we're going to be looking for the retest for that continued push.
Why are we looking for the retest on this move? That's the big question. What are we looking for? He says when you get above this high and you get below this low, you want to take a short right here, or you want to take a long right here. Oh yeah, by the way, if you don't know what longs is, longs means you're going for the buys, and shorts mean you're going for the sells, by the way. So let's say, why am I taking this long? What is the reason why I'm taking this long? Because we had a breakout? Is that the only confirmation for a breakout?
Back towards the upside. So this is where we can look to take entries long with a stop just to break below, and we're going to look to target a 1 to 2 risk to reward.
Why are you looking to take a 1 to 2 risk reward if we don't see the point of liquidity that we're looking for? We're looking for liquidity. We're looking for the next target. So you might say, I want to look for a risk to reward is 1 to 5, 1 to 3, 1 to 2. But you're not looking for the risk reward. You're looking for how much you're willing to risk. Like, you know, if you got this much risk, you're bound to probably get wicked out, you know? Sometimes you're going to risk as much as you want, but most of the time you want to risk as little as you can, because you're asking yourself not how much you're taking out of this, you're asking yourself how much it costs you to take that trade. Because if you can't withstand the risk in the trade, then you was not able to make the trade in the first place. So for example, let's say that you go into one micro and you say, okay, my 1 micro right here is stopped right here, and that's like $30, and your return in this will be $60 or $50. That's not bad. But let's say if you wanted to go into 5 micros, and your risk down here would stop you out 300, and you only make 600. Are you willing to risk $300, $400, $200 for the sake of just a reward of $200, $400, and $500? Are you willing to risk that? So my thing is, I'm looking for the least amount of risk that I can take. I don't want to see risk this heavy, risk this side. There's too much room for a downside for me, you know? As volatile as this market can get, as volatile as the markets can get, see how quick it's already, watch this. Now, I don't know. Now, that's actually a nice trade. This is a nice trade. This market can fake you out and come down so fast, tap you out, and go right back up to the highs. See how I swept see how he has a line up here? Why he didn't put the highs up here? He could have easily put the line at the tippy top of this green bar. He could have added it right here because he would have known that this would have went to the highs. Also, the respect. You see the respect across this. This telling you that it's continuing green. But my risk, I want my risk as tight as I can be. I don't want my risk all the way down here, bro.
And just like that,
nice
we're
trade.
able to capture this nice move towards the upside. All you need is this one.
Nice trade. But that's not all you need. I can guarantee you that is not all you need. You're going to need way more than just a breakout to tell you if this market. Because if you look at the market today, this morning, the market literally had a breakout and it dropped, came back up, dropped again, and then finally took off. Literally. Like, it was just disrespecting everything.
I'm going to teach you how to read candlesticks.
All right, we know how to read candles.
And candlestick patterns every trader should know. The doji candlestick pattern is...
How about this? Y'all seen these before? I got something better. Y'all seen these before? Y'all seen which way the market may go? Directions. Instead of learning this, see market directions. What's that? What's that? Or here it is. Buyer
Have you ever shorted the market, but
like this? Yo, we doing these. We got to do a series on these. We got to do a series on buy or sell. All right, 3 seconds. All right, y'all in the chat. Y'all got to participate. Which way you going? Are you buying or are you selling this market? You got a couple of seconds. You got to buy or sell this market. Here we go. Give me a second. Am I buying this market or am I selling this market? How would you know? You don't have enough confluence. I'm gonna go buy. Cap. That don't mean nothing. He gonna say that's the break. He gonna say that's the break and it's gonna drop.
That was buy or sell. 5 seconds to decide.
That's me. Yeah, that was cap. You're a very beginner? No way. We're gonna keep going though. Alright, so let's do this. Let's try this again. I'm going with it. Let's go. That was crazy, bro.
Buy or sell. 5 seconds to decide.
I'm buying this market.
Watch this setup unfold step by step.
I'm buying this market.
First, we get a liquidity sweep. Price takes out previous lows.
Yes.
Trapping early sellers.
Yeah.
Then, we get a break of structure.
Yeah.
Buyers are stepping in.
Buyers are in structure.
But there's a problem. Look at this huge fair value gap.
Yeah.
That's a sign price might pull back to fill it before making the real move.
Yes.
And that's exactly what happens. Price taps into the fair value gap, reacts, and confirms buyers are in control.
Okay.
Now, I wait for one final sign.
A break of structure?
Another break of structure to confirm momentum. There it is. Now, it's time to enter. Stop loss below the reaction point. Take profit.
I wouldn't wait for break of I wouldn't have wait for break of structure because we already got break of structure. So for example, you know how he said wait for a break of structure? He said wait for break of structure. The reason why you didn't want to sell this market is because we swept the lows, right? We swept these lows. We swept liquidity. Remember, the market's job is to take out liquidity. I want you to know this, Cruz. The market's job is to take liquidity. Either what's liquidity? It's the wicks. It's the form of liquidity where the market wants to go. The market's job is to keep pumping higher to make us money, right? To make the market, like for example, it's a market. A market wants to go up in money, right? But markets tend to correct themselves and come down to fill in gaps, to fill in liquidity, to get people in, to get people out of the market. Whether they're buying stocks, whether they're trading forex or futures. The market's job is to seek liquidity to get people in and get people out of the market while continuation into the green, right? So right here, you've seen that the market swept this low, but what happened? The candles didn't break this low, and it went in reversal looking for the next liquidity.
At a 1 to 2 risk to reward rate.
Now he told you to get in on a breakout. I wouldn't have gotten up on here. You see how he put the entry right here? I would have got in right here. We already had the breakout. He said
price might pull back to fill it before.
We already had the breakout. The breakout was right here. The breakout is already, it broke this, it broke this, it broke this, it broke this. We already had the breakout. Now we had the pullback. I would have got in if the market respected this block. So right here.
Before making the real move.
I'm gonna show you.
And that's exactly what happens.
Respect it. Right here.
Price taps into the fair value.
If he prints right here above this, I'm getting in.
And confirms buyers are in control. Now, I wait for one final sign.
No.
Another break of structure to confirm momentum. There it is.
Right here would have been perfect.
Now, it's time to
look how perfect that was.
Stop loss
here you would
reaction point.
That wasn't a breakout, by the way. A breakout is when a candle closes above. A candle closes above the wick. That wasn't a true breakout. A breakout would have been like, you know that candle closed above it. Now look for a retracement. It's going to have a continuation. So that's not bad. That's not bad. I like this. Sweep of the lows. When you sweep this liquidity right here, these nice little hanging fruits right here, I would look for the reversal for sure. Let's look for something else.
Have you ever shorted the market, but price keeps pumping and pumping and pumping? The reason why is because you don't know when to buy or sell. This is how I do it. Step 1. Start on the weekly.
I'm about to make trading. Buy or sell? Let's break it down.
Buy or sell. Yeah, the market tends to take out liquidity and then go in reversal, like the guy told you. Remember when you learned CRT and PO and Power 3? He said, wait for it to sweep, look for a fair value gap, and then it pumps. Wait for a sweep, look for a fair value gap, and then it drops. Like, that's mainly what the market does. All right, let's see what we got. Let's see what we got. Let's see what we got.
Buy or sell? Let's break it down.
All right. Are you buying or are you selling this market? Uh-huh. It depends. I would buy this market.
Price takes out sell-side liquidity, then displaces upward. Clear market structure shift, signaling bullish intent. Price doesn't move up in a straight line. It needs liquidity first. So it fakes a move up to trap early buyers, grabs more liquidity, then sets up the real move. Price returns to the original order block.
That's what I'm talking about. You know, that's what I'm talking about. This is what I'm talking about. This is the type of moves you look for. When it sweeps that liquidity, that was the market structure shift, it's going for a higher liquidity. Man, that's...
You can buy from the top or the 50% level for better risk reward.
Yes.
Either way, the trade plays out and TP hits.
Good job. We passed that one.
Want more breakdowns like this?
Good job.
Where will the market go next? You have 5 seconds to decide.
Buy.
Write your answer.
Why am I going buy? It's because the doji, and also this green candle got above this candles. I like that. That's a strong indication for a continuation long.
Obviously, we have a morning star pattern in the current market, and if you follow me, you should know that this.
Don't learn morning stars. Don't listen to it saying morning star, superstar. Man, it's either going to be a strong rejection or not a respect. That's it.
Market will most likely go up. It's a candlestick pattern which consists of 3 candles, starting with the first strong bearish candle, followed by a small-bodied candle, which can either be bullish or bearish, followed by a strong bullish candle.
Okay.
This alone shows me that we had a stop in price at the bottom, followed by a strong bullish move.
Okay.
Maybe people who had short positions closed there.
Yeah.
So
he just yapping.
Would you buy or sell this market?
Would I buy or sell this market?
All right,
let's see it. What's the market?
Daily, 4 hour. Yep.
Let me see. Is he buying or selling that market? Can y'all see it? And I can't even see it. I can't even see it much. And I'm gonna try to guess this market. I'm selling that market. I'm selling that market.
Why?
Because we took out the highs.
4 hours bearish. That's it. That's all you need to sell. That's my confirmation right there. Okay, you're right, but you're wrong. Give me this, bro.
How?
So yes, this market is ready to sell, but not only because the 4 hour is bearish. If you go to the weekly time frame, you can see that the weekly time frame has a ginormous weekly engulfing the last 5.
I don't even have to go to the weekly. I don't even have to go to the weekly. I could tell right here. Even right here. So I would sell it. I'm gonna tell you why I don't have to go to the weekly.
Why?
Even if you, man, the weekly is cool. It's perfect. It's really good to wait. But you will have the you gonna have a weekly and you're gonna wait 5 days. You're gonna nah. You see right here. You see this big old wick right here compared to this high. So look at this wick right here. Look how much it rejected, bro. This rejection was crazy. Look how much rejection. So look at this high. Right, with my pointer, look at the little pointer, right? Look at this high and look at this wick. Crazy. It did it once, it did it twice, it did it 3 times. Even though we rejected right here, that rejection was so strong on a 4 hour. That's telling me this thing doesn't want to go up.
4 hours bearish. That's it. That's
Instantly telling me it doesn't want to go up.
Right there. Okay, you're right.
One of the things about trading is you could either be too late in a market or you could be too early in a market. But when you see a market and it's like telling you, yo, this thing is setting up perfectly, it's done it too many times, you can get in.
You're wrong. Give me this, bro. So yes.
Nah, you was right, bro.
Let's play guess which way. You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
What are you doing? What we doing? We buying or selling this market? What we doing? I'm giving you a shot before he 3, 2, 1 it. Are we buying or are we selling this market? What are we doing? Buy or sell? Come on, chat. Got 4 people in here. Buy or sell? What we doing? Buy or sell? I'll let you see it again.
Let's play guess which way. You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
I'm going to... buy this market.
Buy or sell? The correct answer is buy. Let's go back
Good
and
job.
see why. Firstly, we can see price was in a downtrend, that there was this bullish change of character caused by this impulsive up move. We are now in an uptrend, so we wait for a pullback.
CHOCH means change of state of delivery or change of character. Change of character is what CHO, but people put, you want to just say MSS, market structure shift. CHOCH is change of character, but just say market structure shift. I mean, just market structure shift. I mean, it's all the same thing. Good job. You bought it. Good job. Let's get it.
To achieve a high reward to risk ratio,
we did it.
We see price has tapped this breaker block. This zone was previously resistance, but now acts as support. We also see these equal highs where retail traders put their stop losses above. This creates liquidity above which
we haven't even tapped yet.
banks look to target. We place our stop loss at the bottom of the breaker block.
Yes,
with
I like a stop that's tight. I like it when the stop is tight. I don't like a big old stop. That's perfect.
Our take profit at the 1.618 fib extension level,
Fibonacci,
achieving a nice 6 to 1 reward.
Good job. All right.
So I made a video a little bit.
Where will the market go next?
Where will the market go next?
It is
what?
Obvious that the market will.
It's obvious. Yeah, it's not that obvious. I can't even tell what other parts it is. That's a bro trying to unteach unbeginners, bro. Look what he said in the chat. Bro trying to unteach beginners. Oh my god, it's funny. You crying, look. I fell off so bad, bro. When I fell off and still landed on my feet, bro. I still landed on my feet, bro. Still landing on my feet. I'm gonna tell you how I fell off. I fell off and felt God. I'm gonna show you how I fell off, just like this. Fell off and found God. Right? Philippians chapter 4, verse 11. Not that I was ever in need, for I have learned how to be content with whatever I have. I know how to live in almost nothing or with everything. I have learned the secret of living in every situation, whether it is with a full stomach or empty, with plenty or little. For I can do everything through Christ who gives me strength. Amen. Glory be to God. Glory be to God. Yeah. Fell off and still landed on my feet. You know, I ain't gotta be in the highlight. I mean, everybody do the same thing every day. I've already did it. I've already made it a lot. But the most important thing I found Christ in the midst of all of this falling off. That's the word of the day. You fell off and still landing on your feet. All right. Let's get back to it. I mean, you never was put on though, so just saying. Let's get back to it.
Here's how to...
Let's play Guess Which Way. You have 3 seconds to decide to buy or sell when
What you
price
doing?
stops moving. Ready? 3, 2, 1. Buy or sell?
Buy or sell. What we doing? What we doing? We buying or we selling? That's one ugly market. Whoever picked this one. Joshua 1:9. Ooh, let's see what Joshua 1:9. Let's go. Joshua 1:9. Joshua 1:9. I think I remember that one. Joshua, where are you? Book of Joshua. Book of Joshua. All the way in the Old Testament. 1:9. It reads, oh my goodness, and I have it highlighted for you boys. Right there. And I also got it right here. This is his command. Be strong and courageous. Do not be afraid or discouraged, for the Lord your God is with you wherever you go. And I also have that as a scripture right here saved up. I got you. So people can see it. This is the Lord's command. Be strong and be courageous. Where is it at? Hey, do I have it? I thought I saved it. Where you at? Where you at? There it is. No. Let's study this book of... Oh, man. This is command. It's literally here. I gotta find it. It's in my saves. It's in my saves. I did a lot of scriptures on here. It's all good though. Be sure. Oh, there it is. Bow. Can't forget that. I fell off years ago. You fell off years ago. Your baby mama carried you. Man, you need to see God, bro. You tripping. All right, back to it. Let's back to it. Let's get back to it. Let's get back to it. All I need is the Lord, man. That's all I need.
Firstly, we see price was in this range formed by
yes
equal highs and lows.
Right.
Most traders, but their stop losses just outside the range.
Okay.
Price has entered this bearish order block or supply zone.
Okay.
This zone previously
we're selling off.
Caused an impulsive down move, and we expect a similar reaction again. We see multiple fair value gaps attracting price through these areas. We place our stop loss at the top of the order block, with our take profit past liquidity, achieving a nice 10-to-1 reward to risk ratio.
Not
Trade
bad,
setups
not bad.
posted on our Instagram.
Not bad. Are we buying this or are we selling this market? What is this? This is not something I would even trade. Like literally, what I wouldn't even know where to start. I would say buy it, but actually I would probably sell this market. I probably would sell this market. I'm selling. Nah, okay. Bullish engulfing, bro. You wouldn't have known if you would have showed us this. Then yeah, if you would have showed us this other candle, I would have been yeah, but not that. That would trick me. Good one though. I would have, but he didn't show this because I've seen some crazy stuff where you would think that it's taken off and it would literally reject right here. Big rejection. We didn't even get into this block yet. We barely even tapped it, so we just tapped it. Well, that was a good move actually, by the way. I would have expected this rejection right here off this candle right here with this rejection would have been a nice strong move. Also the break to stay below this. See that? He tricked us. It's like almost like as if he saved it to not for us to see it. And if we do take this out, we might see a drop. Okay. Not bad. That was a good move.
6 order types in 4.
Good stuff.
Welcome. Let's play guess which way.
Okay.
You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3.
Let me go back.
Let's play guess.
I gotta see the beginning.
Let's play guess which way. You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1. Buy or sell?
Selling.
The correct answer is buy.
What? No way. Show me.
Let's go back and see why. Firstly, we see price was in this down channel creating buy and sell side liquidity. Dank swept sell side liquidity with the recent down move. Price has now entered this bullish.
I didn't realize. Yeah, you're right. That is a block. My bad.
Previously caused an impulsive up move that broke structure. We expect a similar reaction again. Danks now look to.
The reason why I thought it was gonna be sell because I thought it was gonna sweep this low right here. Well, what market is this?
By side liquidity. We put our stop loss at the bottom of the order block.
Buy, yeah, that's true. That's true. I'm tripping. That is, you know what's crazy? That's the model, bro. That is the model. When we sweep these liquidities right here and hit this block, that's the buy. That's the thing I've been trying to tell. I was tripping. That's it. When you sweep this liquidity, even whatever he's yapping about with these blocks and all this, the fact that we broke this high and we swept this low right here, and also we hit this block, all we had to do is buy and put our stop at the low. That was it. And we go target this right here. We target this right here.
Achieving a nice 6-to-1 reward to rich.
That's true. That's true. I overthought it. That's true. Good job.
Let's play guess which way.
All right.
You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
I don't know. This is one I would sit out of, honestly. I mean, I like it for the buys, but honestly, I don't know. I probably would sell this market. I'm gonna be honest with you. See. No, I will buy it. I'll buy it.
Buy or sell?
I'll probably buy it.
The correct answer is sell.
What?
Let's go back and see.
And please don't say no fair value gap right here, bro. Please don't tell me no, because I think the only way you really can see what this market may go on if he showed you a higher time frame, so you can kind of actually see what's really going on. The fact that I can't see the higher time frame, it looks like a buy because we swept this liquidity, we took out this block, and we respected this block. That's what makes me think. But if I see a higher time frame, and please don't say no fair value gap right here. If you say fair value gap, he trash.
Firstly, we see price has entered this bearish order block. This zone previously caused an impulsive down move, so we expect the same again.
It didn't create a impulsive down move because we don't have a doji, we don't have no resistance that's saying repulsive. That's why I don't like this stuff.
Also spot these equal lows creating liquidity for bank.
They got liquidity right here. They got liquidity right here. They got liquidity right there.
Expert to sweep. There are multiple fair value gaps to attract price downwards.
Fair value gaps, no. Imbalances.
We place our stop loss at the top of
the. Because a fair value gap is something you use. A fair value gap is something you use as an opportunity for it to respect a zone and continuation, not something that's going to be broken. Because if it's a fair value is something that you're getting something for a fair value. You're getting it for an area that can be good for you to get in. Like it's an area that you can buy or sell, but this is not a fair value gap. These are imbalances that needs to be filled. A fair value gap would be something that you'll say, okay, yeah, I can get into a nice entry right here because it's a fair value. This ain't a fair value because you're literally breaking it. Watch, you gotta chop through
Order
it.
block. With our take profit past liquidity, achieving a nice 14-to-1 reward to risk ratio. Trade setups.
See, it just breaks through this. Okay, so if the lows, now it's probably gonna go back to the highs.
Posted on our Instagram. Follow for daily.
This is how you can literally.
Yeah.
Let's play guess which way. You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
All right, what we doing? We buying or selling? We doing this. Market learning 101. What we doing? No chase. Which one you going? No chase. If you still in the chat, which way you going? Buy or sell? No chase. I'll give you a shot. Where you going? Cruz, you know where we going, bro. You know where we going, Cruz. I don't even have to tell you where we going. You know where we going. Y'all know, bro. It's gonna happen. You just gotta say that one word. Just the one word, bro. Just say it.
Buy or sell? The correct answer is buy.
Yes, sir.
Let's go back and see why.
Yes, sir.
Firstly, we see price has entered this bullish order block or demand zone.
Put your stop
this
at the
zone
low.
Previously caused an impulsive up move. We also
That don't mean it. The impulsive. Oh, yeah. If it was so impulsive, why ain't just break? Why it took so long to break?
see these equal highs creating buy side
Equal highs. I like equal highs.
Liquidity for banks to sweep. There is also this fair value gap attracting price through this.
It's not a fair value gap. It's an imbalance that can be filled.
Area. We put our stop loss at the bottom
lows,
of the order block
and target the highs.
with our take profit past liquidity. Achieve
such a simple setup that literally everybody should be trading.
Keeping a nice 4-to-1 reward to risk rate.
Good job. We did that.
Let's play guess which way.
All right.
You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
Whoo! Okay. Which way are we going on that?
Buy or sell?
Honestly, I wouldn't even trade this. It's so rangy looking. What he gonna say? What he gonna say? He gonna say such a strong down pattern. We just took out liquidity to come back up and shoot down.
The correct answer is sell. Let's go back and see why. Firstly, we see price has entered this bearish order block.
If he just shows that, if he can just show the next candle, it will give you the answer. He's good at showing you that big old candle, so you can't see if it's dry, if the candles are drying up, like if the buys are drying up, like if it's like, let's say if the green candles are big and they keep getting bigger, then it's like getting smaller and smaller, and then it's like, okay, now you know there's a reversal about to come. He's not showing that, and that's why it's making it tricky. That's why I don't want to trade it.
Or supply zone. This zone previously caused an impulsive down move, and we expect the same again. We spot this double bottom-like pattern below, where retail traders place their stop loss below. This
retail traders put their stop loss below? No, bro.
This creates sell-side liquidity for banks to target. We also see this fair value gap attracting price downwards. We put our stop loss at the top of the order block, with our take profit past liquidity, achieving a nice 6.
Okay. I mean, that trade I would have not take.
Let's play guess which way. You have 3 seconds to decide to buy or sell when price stops moving. Ready? 3, 2, 1.
Buy or sell this market with that candle. I told you he always do to stop you from seeing the truth. That's so sneaky, bro. It's like you can't even see it. Like you can see it, but you can't see it the way you'll go, oh, that's 100%. It's like he's trying to give you that 50% because it's like, what is this candle? Like what? Like, you know, this thing like I don't know if it's gonna close and shoot up. You know. Honestly, to be honest with you, I'm thinking sell too. I'm thinking sell too.
Sell. The correct answer is sell. Let's go back and see why. Firstly, we see
I don't like how he don't show the rest. He shows he could show a little bit more when he doesn't.
Price has entered this bearish order block. This zone previously caused an impulsive down move, so we expect the same again. We also see multiple liquidity pools.
And by the way, the market don't always do this no more. Like, these are probably so old. This is 2023. I can guarantee you this market ain't doing this no more. Like this, like the impulsive move, retracement, the repulsive move, like it's not doing it, bro. It's sweeping liquidity and reversing. It's sweeping liquidity and going back up. It's doing that now. But yeah,
which banks love to sweep. There are
let me tell you, banks love to sweep. Let me tell you something else. Oh, he's about to mention it. This is the big one.
Multiple fair value gaps attracting price
Not
to these
fair value.
areas.
Well, that is
we
a fair value
place
gap.
our stop loss at the top of the order block. With our take profit past liquidity.
Let's see if the pattern is going to reverse off this block right here. This block is going to show you if it's going to reverse and keep going down. Like if it's going to get underneath it, respect underneath it, and go down. So get underneath, respect it, and then go down. Let's see.
Liquidity, achieving a nice 9-to-1 reward to risk ratio. Trade setups posted on our Instagram. Follow for
Ew, that's ugly market. Whatever market you trading, bro, it's ugly.
Let's play guess.
Nah.
Let's play.
Nah.
Buy or sell.
5 seconds to decide.
First, let's analyze key support and resistance levels.
Yeah.
There appears to be strong buying power within the last 45 minutes.
Okay.
However, the prices began to consolidate slightly downwards.
Yes.
If we take a closer look, we can notice that this develops a bullish flag pattern, which can tell us that this is a good long entry.
Okay.
Looking at the MACD for further confirmation,
the
MACD line is right about to cross above the signal line, which is a bullish signal confirming our entry.
I would have sold this unless I seen a higher time frame, but he is right, because the fact that we're still in a strong strong move, this is still long. I like how we got this block right here. This block is telling it all right here. This block, this is telling it all. This is telling it all. There's another move I want to teach you. There's something else I want to teach you. You see how when you see a like a loop like this. When you see a loop like this, usually when you see like a big drop, a loop, there's always going to be a big pump. Or a big loop, it's always going to be a pump like this. Drop, loop, pump. Drop, loop, pump. Drop, loop, pump. You usually see that. You know what I'm saying? Like that's usually one of those those little hitting little patterns that you'll notice without actually have to trade technicals. So
I enter long here, setting my stop loss
this thing should go up,
below the current downtrend, aiming for a risk to reward ratio of 2 to 1.
Put your risk at the low of this.
A few minutes later, and our take profit hits.
I had a feeling it was gonna be a big pump because of that loop. You kind of could tell. Okay.
The power of 3.
Power of 3. Woo!
The power of 3
you know about that, bro.
gives us an opportunity to buy below the opening price of the day.
All right, I'm about to get off in a few.
Bullish continuation.
All right, blah 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 blah. It's just yapping. All right, y'all. Look, it was fun. It was fun. Hey, it's a lot. Look, the thing is, you don't have to be perfect in trading. Remember, trading is not. I have to learn this skill in order to understand. Just practice. If you can find a practice account, if it's you sign up for, let me get rid of this. If you let me get out of this. If you sign up, let's look at my trading. Let's see how I've been doing. Let's see. Let's look at my trading. Let's look at my trading. All right, let's look at my trading. What is this? Get up out of here. Get up out of here. We ain't doing that. Let's look at my profile. Here we go. That's me. All right, let's see how we've been doing. We've been trash. Have we been trash can? Let's see. Let's listen to that boy.
I can get a quick stop right there. 120. Hey, be careful.
Okay. All right, I like this zone. I like how we're not breaking this candle right here. Oh no, I'm tripping. We're going short. We're going for a quick move short.
Wow.
You know what? This took all day. Let's look at something. Let's look at something back when I started. Let's look at when I first started. Right, first started trading. Like not first started trading, but first really started posting. All right, let's see. Let me try this one. Okay. Dang, that played out so fast. Yeah. Oh my goodness. Right. All right. Remember that other thing I taught you? Remember when you have a big drop, a loop, what happens? Bink. So that's just a little small pattern, but that's not what I'm trading. So let's get to it. All right, we got a VY right here. Look, we got a fair value gap right here. I want to see us respect this. Inverse. I got stay above this. Also, let's see, fair value gap. Previous day high. I'm gonna talk previous day low again. Liquidity, previous day low. And I go back in the trade again if I see a clean trade. Oh man, this thing is skipping. If I see anything on the footprints that say, "Hey, these sellers are coming in. Get your tail out of here." Yeah, looks good. Let's go. Good trade, y'all. We did it. We out. We out. Good trade. We did it. Proud of y'all. Follow our rules. Didn't gamble. Seen a clean setup. Yeah. So the setup was right here. If I see a clean. So the setup was right here. I'm gonna show you real quick before I get off. Goodness. So I seen this big drop. I seen it respect this support line, and I seen that it kept holding the support line, and it went up. You're like, what if it would have came back down? I missed my entry right here. It just shot up. Like the market just shot up, right? I said, okay, bet. What I see right here is a fair value gap. Green, red, red with this gap. I said, this is an inversion. I swipe it over. All right, we got a VY right here. Look, we got a fair value gap right here. I want to see us respect this. And this previous day low. We respected the fair value gap in the previous day low, and we have the continuation. You know, and you know me. I don't like a wide stop, so I like to keep my stops underneath the fair value gaps. Above this, also, let's see, fair value gap. Right. I'm gonna target this 30-minute again. Keep my stop at the lows of that fair value gap. I go back in the trade again. I want to see all this liquidity get swept. And guess what it's doing? See these lines? Look how it's respecting these fair value gaps. It's resisting, but I want to see it keep going. If I see a clean trade. Yeah. If I see anything on the footprints that say, "Hey, these sellers are coming in. Get your tail out of here." Yes. Let's go. Good. Push. Good trade, y'all. When you get a basin like this, expect a big breakout. We did it. We out. See? We out. Good stuff. Good stuff. Good stuff. Good stuff. All right, this was low. 45. Right there. Push. I was down 1,000 a day. All the way. I got it back up to 121. This was really tough market. Really tough day, really tough market. Really tough day, really tough market. I'm gonna see one more and I'm gonna get off. One more and I was get off. I'm not gonna overtrade it too much for y'all. This one. I'm fully out. Ooh, what? I'm fully out. I'm fully out. I'm fully out. Yes. Yeah. I'm fully out. No, you're not. You're fully in. I'm fully out. Wait, why is it stopping? I'm fully out. I'm fully out. But if this tricky one. Here we go. Here we go. So what am I seeing? All right. So you know how you say, wait, if there's a doji, what happens? There's a reversal. No. Right? Okay. So I'm in the longs. I'm down. I'm in 19 micros. Tight stop right here. Tight stop. Tight stop of 5 right here. 5. I want a tight stop. I'm gonna do 5 right here. Okay. I'm going for these highs. I want to see us take this out. Take these highs out. And my stop tight right back above. I like a tight stop. Let's go. Cause I don't like risking much. Take off 5 and we hit it. This market was consolidating, by the way. Took out the highs. We didn't tap it. We're about to tap it now. Bye. All right, we out 5. $150. Come on, start at break even. We didn't sweep the highs though. Can we get that push? I might have to get out. But the thing is, we had a resistance. So I'm afraid that we might drop back down. That's what I'm afraid of. Right? I'm getting rejection. I'm getting out. I'm out. I'm fully out. I'm out of that because I got scared that the resistance was about to come in, and yes, it did. I thought the move was gonna break because I seen the volatility come in, but it didn't come in. So it took it out and just stopped. So that wasn't too bad. I'm gonna get one more and I'm out of here, y'all. One more. Let's see if I can find one that was like really like me, like really getting into it. Really getting into it. Let's see. One more and I'm gonna get off, y'all. And I'll catch y'all next. I blew this account that day. What is this? Ooh, this was a good day. I want to see a retracement back up onto this right here, and I'm going long. All right, I'm going long. I'm going long on this trade because we respected this fair value gap perfectly. We swept some lows. We respected this fair value gap, and look at this. Look at this red line. We are not breaking this, man. We are not breaking this. These candles are not. The candles couldn't even get past this. I'm like, okay, if the candles can't get past this, we're going the opposite way.
I'm going heavy.
And what did I say? When you see a big little drop and you see that little circle-like thing, oh yeah. This man laughing.
I'm at 45.
I'm in 45 micros. I'm already up 348, but I'm in 45 micros right now.
To a certain high point. I'm gonna take out partials right here.
I want to see partials get taken out the highs.
All right, so we in 5 left.
Oh, we in 5, so we at 1328.
We got 1328.
All right, took out the highs on this one.
Candle just printed. That's why I took out.
The reason why I took out of this one because look how wicked it's been this whole time. Look how crazy this market has been. So I just wanted to be safe just in case it did drop again. Just to see how we went up green, dropped again, went up green, dropped again, went up green, and we might drop again. That's why I took out just to be safe. I'm in another contract. I like the support. I like how we're respecting this zone right here. I like this block right here. How we're respecting this. This looks good to get taken out to take out this wick. You see, it looks like a video game. Support, zone, and we got this huge wick that I want to see us take out. I got my TP right here. I got my stop at these lows. I'm willing to risk my profit to take this out. I like this. Looks good. Support is respecting. Look how it's building up. See? Look how it's respecting this halfway. Looks good. Looks good.
There you go.
Come on. Take out this high. And we out of there. Yes.
Out of there.
24, 29. Nice, nice, nice. That's not bad. That's not bad. That's not bad. That's not bad. All right, you know, the market ain't gonna always look like that. The market gonna have some tough days. It's gonna have some crazy, grimy days, news, crazy, volatile days. But the more screen time you get, the better you become. All right, y'all. I'm about to hop off, man. It's been fun. It's been fun. I'm about to catch y'all another time. I'm tired. I'm exhausted, man. Like I said, guys, make sure y'all put your faith and trust in Jesus Christ. I'm gonna put this up here for y'all. Make sure you put your faith and trust in God. Trust in the Lord with all of your heart. Trust in the Lord with all of your heart. Lean not on your own understanding, and in all of your ways seek His will. Trust in the Lord with this heart. Trust Him, and do not lean on your own wisdom. In all of your ways, seek His will. Ask for His will to be done in your life, and He will show you the right path to take. God bless y'all, and I'll see y'all